All right. So basically, the reason why I am holding the call is just to like answer questions. It's more like of a question and answer. So it was scheduled for to be a 5 hour class, but we will start, and if by the time everyone asks their question and there's no one else here, we're gonna call it a day. But right now it's going to be a 5 hour class. I'm going to be going in depth with everyone's question. I'm hoping you guys can see my face. I think it's a bit dark for me. 1 second, gonna take this a little back.
Yeah.
Hold on.
Bitch. It's crazy. Shut up, noodle.
Hoping it's a bit better now. Alright, sorry, I'm back. So I'm hoping you guys can see my face better now. I'll just be taking questions and giving you guys a response to maybe the question that is really you're really struggling with the most on ICC. And yeah, that's how it's going to go. So if you want to ask a question, you can raise your hand. You can use the chat box, but if you raise your hand, you're gonna obviously come first because the hand raised are the one I can see, or whatever. So if you're in a noisy environment, please mute yourself. Or otherwise, I will just remove you in the call. So who's going to have the first question? More or less. You can raise your hand or you can just unmute yourself if you want to ask a question.
I'm thinking about starting a small $100 account. You think that'd be enough to trade the 4 hour time frame with? As long as I'm pretty selective on my entries.
Okay, well, in terms of capital, I think I would always advise to have a bigger account because there's stress that comes from having a small account. There's a lot of stress that comes from that. I'm not sure if it's something you want to go through because it's also something that you have to. It will train you, but it also holds you back a lot. It will make you be greedy. It will make you always look for trades. It will make there's a lot of stress that comes with a small account. So if you are in that phase where you're still trying to get consistency, then you can just start with that $100 account and see how far you can go. Me personally, I have had a $100 account which have grown, like grown, withdraw from. So I think anyone can raise. I didn't say it's not possible to raise a small account. I'm just saying that there's a lot of stress that comes from it, and personally, I would advise not to go through that stress. But
Lọ́jọ́ jẹ́ kó lọ́ọ̀ jẹ́ ká tún sweet.
if you are still struggling with consistency, then of course you can use that $100 account and see how far you can go with that. You can reach like let's say $10 per trade or $15
How
per trade.
Okay. I only asked that because I got tired of buying prop accounts after the last year and a half.
Okay. Just use the $100 account and find some consistency. Be able to grow that consistently and be able to make profit on that account, and then that will now tell you if you're ready to go for a prop firm because prop firms are tough. It's not easy. So just because I do it like that doesn't mean that it's so easy. There is rules. You have to only take best trades. You have to not trade news. You have to there's a lot of things that comes with it. So for you to be able to have confidence in your trading, for you to be able to pass prop accounts confidently and be able to scale through in that, you need to find that consistency in small accounts first. If you don't have consistency in small accounts, you can't pass a prop firm. If you pass, it was luck and you're probably gonna blow it in the live phase. So unless you want to depend on luck, but just use the $100 account, try to find that consistency and then go from there.
Yeah, I got you. I've gotten several payouts from prop accounts, but I always just feel like it triggers my gambling mindset. So my plan was to every payday, which is every week, was to put $100 into the Forex account and just trade 0.01 lot size and just slowly, focus on my entry setups
Hmm.
while slowly building the account over time instead of getting a prop account and just being stuck in the gambling.
Yeah, well, if you can stay consistent with that, then you can try it. If you just the main thing is just whatever you have in plan, you need to stick to that plan. You can't say I want to risk a 0.01 lot size and risk small, and then all of a sudden you see a trade that you think is good and you are risking three times what you are planned what you've planned to risk. So you have to stay consistent in whatever the plan is and see it through.
Yeah, I got you. We'll see how it goes.
Sure. Next guy. Okay, Alexander, go on. Let me unmute yourself. How far? Where's the drink? Drink.
Okay.
Yeah.
Yeah, my questions is from the ICC concept. So my question is, when do you know, like, how do you know when the corrections are over?
So okay. Um, I'll have to share my screen. I haven't opened TradingView. One sec. So in terms of ICC and knowing when corrections are over, there's not a black and white thing. I can easily tell you is when trend switches from lower lows and lower highs to making higher highs and higher lows. That would be the basic. But this call is not just to tell you the basic. I will have to explain everything in depth for you to be able to understand what you want to go for. So I will share my screen right now.
Okay.
I'll share. Okay, can you guys see my screen?
It's
Mm.
loading. It's loading. Yeah, we
Now,
can
yes.
see it.
You can
Mm.
see it now.
Yeah.
Okay, I like to do breakdowns with trades I took. I don't like to use trades I did not take because it feels like I'm cherry picking. So I'll always use trades I take. So it may not be the one you want, but it's just what I took. So I'll just break down for you using that. So here on Nasdaq, because your question lines perfectly with Nasdaq right now, and your question is how do I know that the correction is over? And because Nasdaq does have that kind of thing, and I will explain it for you. So we come here on Nasdaq, and I was straight to you on USDJPY, even though I didn't take that buy. I saw something like that there. So on Nasdaq here we have this level where price made that. If you are in a noisy environment, mute yourself so you can avoid being removed from the call. So we have
Okay.
here where we made an indication here, right? This was an indication, so price was starting to correct itself. Now after this correction, price starting to buy back above here. So how did I know the correction is not over? Why didn't you buy here? I guess that's your question, right? Why didn't I buy here? Correct?
Yeah. Yeah.
Good. So
Yeah.
now
Mm.
it's not black and white. Some sometimes it's going to require a different approach. Other
Can
times
you
it's
give me
going
this
to
headphone?
sometimes it's going to require a different
Sometimes it's going
approach.
to require a different approach.
Uh, before this
Uh,
removed from the call.
for this call. Hmm.
Do I do this? Yes.
Do I do this? Yes.
Okay. I think I've done what I need to do. So let me. Uh, not so very familiar with go. Can you guys see my screen still?
Yeah.
Okay. So we have price give an indication here.
Can I trade Nasdaq here in Nigeria?
Of course, I'm
Is
in
it
Nigeria.
possible? Okay. Okay.
So We have this indication here from price. Price made this indication, corrected itself, and back above here normally is the continuation to the upside. But why didn't I buy here? Now, as I was saying, it's not black and white. It's not do this, do that. Trading is not do this, do that. What really matters in your trading is how you approach it, how you think about it, and how you approach the situation. So in this situation, you have to first of all ask yourself, how did the correction happen? If price made, let's say, a sudden drop, or just price just started dropping all of a sudden and then made a correction, then of course back above here you can get in. But why didn't we get in? If you look closely, you're going to see that price didn't just make that sudden drop. Price built consistency as it was dropping. It was making, it was like it was in a trend. It made a low, it made a lower high, it made a lower low, it made a lower high, it made a lower low, it made a lower high, it made a lower low. So it kept building consistently to the downside. That tells you one thing, that there is some consistency here, and for you to say that buyers are starting to come into the market, you need these consistently built lower lows and low highs to get broken before buyers can start to kick in. So now, again, let's say for instance you managed to get into the trade here. Even if you didn't see that, you got into the trade here and price was buying. As price came into the zone, you see that this high that caused the break of this low, price struggles to break above that high, showing you what? Showing you that, hey, before the correction happened, we have been seeing consistent lower lows and lower highs being created. Now, price comes above this high again and it's failing to take out this high, meaning that this can potentially be another lower high, right? So, in this scenario, I would say you needed to see price create that you needed to see price make that those lower lows, that as you saw price was creating lower lows and lower highs, you needed to see price break this trend it's on for you to then say I want to buy. Because in the sense that where you are saying, okay, you want to trade right now, you want to make money right now, you're looking at the current trend, right? Let's say we look at this current trend and you want to use this current trend to catch your trade. Let's say you want to buy here. Why would you buy here when you are seeing that price is clearly on a lower lows and lower high trend? It's not like it made a sudden drop. It was making a consistent lower lows and lower highs. This was a good trend. So why would you buy here when price is clearly showing you that, hey, maybe we might buy later, but right now the trend is on a downtrend. So you want to kind of wait. So you want to kind of wait. But the issue, right? The issue that happens there is that most people are scared to miss out on the trade. They are scared to miss the trade. What they are going to say is that, what if price then starts buying and just leaves me and goes? Then that where I will tell you that, hey, you need to understand that it's okay to miss the trade. You need to understand that you trade two, three, four pairs. You need to understand that you are looking to take three clean trades in a week. It's okay if you don't trade any trade for the week. It's okay if you miss a move. The main point of the thing is that when you get into a move, you need to get into the right moves. You don't want to get into the positions where the sellers have a chance of playing out. You don't want to get into the positions where you are left stressing. You want to get into a trade and you can confidently go about your day. That's how I want to trade, and that's how I teach everyone to trade, in a way that you can confidently go about your day knowing that you entered a good trade, and if price takes you out, then that means that the trend is now invalid. So in this scenario, that is why we never got in here. We didn't get in. I think I marked out around this area then, and I said I wanted to see price break above here before I start looking for buys. But price never did that, and we missed out on. I think we caused this move, or we missed it entirely. But whatever. But my point is that that is why we didn't get in here, because the trend that caused this correction wasn't broken yet. Now let's consider a situation whereby um you get in as soon as price gets back above here. Okay, let me use gold. Again, I'm using gold because I took gold, I traded gold, I shared it on the group, and that's why I'm using it. So gold here, why did we even consider a buy on gold? We go to the 4 hour time frame. I explained this on the group. I'm going to explain it again. If you are on this call and you're not on the Telegram channel, you should be. It's a good place to be in. So we have price was making uptrend on gold, right? Price then came here and made equal highs, and then made this low, corrects itself, and then makes a new low. So showing us that there's potential that sales are starting to come into the market. But price broke makes a correction, tries to continue pushing down but fails multiple times. And then what does price do? That price then goes on to take out this high that caused this low. Now we mark that level out. Why are we marking it out? Because we've been in an uptrend all this while. So now we mark it out saying that let's see how price reacts above this zone. Why above this zone? Because this high is a high that caused the break of this low. So now price comes and takes out this high. This is the indication for me. Some people called here the indication as well. That is correct because this also caused the push for this break to the upside. So some people called here the indication, but for me personally, I preferred to use above this level. So now price comes down here, rejects, couldn't make any new lows, and then price starts to buy back into the zone, right? So in terms of your question where you said how do we know the correction is over, this so where you said how do we know the correction is over, so this one, as you can see, this correction here never really had any consistent lower lows and lower highs being built. It just kind of dropped. Yeah, you might call this a lower high, a lower low, but if you look at it like this, it kind of looked like it dropped, right? It made a sudden drop, and there's no consistency here that you would say price needed to build on. So there was no structure for me to say price needed to break. Even though maybe here you can say price kind of, this is not the best example, but I'm trying to show you every possible scenario. So you can say price kind of made multiple highs here, but also couldn't break any low. Kind of inside here was just consolidating, and then immediately price broke back above this level. That's why I said that hey, we can buy this trade because I think it's looking good and it's the good level where I think buyers have control. They can push price all the way up to this zone, and that's why we bought the trade. I will close it around here. Now let me use another instance as well that I think is also a very good example. Let me use uh okay, we sold.
Why? I have a question.
Go on.
Okay. Why are you always using higher time frame like 4 hours? You know,
Do you know Sai?
because well, yeah,
Do you know Sai? Trade by Sai.
yeah,
Okay,
yeah,
good. So,
yeah.
did you watch his videos?
Yes.
Okay, so one thing I learned from Sai when I was learning from Sai, before I even started learning from Sai, I liked using the higher time frame because it gave you the time to make decisions before trade play out. Now,
Yeah.
after I learned from him, the things I learned and then the thing I start happen to notice that happens with price is this: before price makes a big push, it accumulates. It always builds up before it makes that big move.
Yeah.
Good. So now, if you are in the small time frame, you are most likely not going to see that build up because small time frames, even any, like let's say for example now, let's say price here on the 4 hour time frame, you see that this was just a big move. But in the small time frame, around this zone, what you will say, you would think buyer are starting to come into the market around this zone. It would look like
Mm.
buyers are starting, it will look like a build up to the upside. What does that say?
Yeah.
Small time frames can be a bit confusing. It can be a bit misleading. It can tell you things that aren't really there yet. That's why it's called a small time frame. It's like when you're using the map. I like to use the map a lot. When you're using the map, Google Map, to go somewhere, and you zoom, you want to go, let's say, from one city to another. When you zoom out, what you are going to see is one clear road. Oh, why did this come here? When you zoom out, what you are going to see is one single road that leads to a known destination, a direct destination, let's say from your city to the next city. But when you start to zoom in, what you start seeing is that you start seeing multiple roads that leads to multiple places in that same city. The more you zoom in, you start seeing streets, you start seeing neighborhoods, you start seeing houses. It starts to get noisy, it starts to get confusing, you start to get lost in where you are going to. And when you get lost, what do you usually do? You zoom out again to see the single road again to understand where you are and to understand if you have missed, if you have driven out of that road that should lead you to where you're going to. Am I making any sense? The person that asked the question, am I making any sense? Am I making any sense? Are you
Yeah,
following me?
yeah, yeah, yeah,
Okay,
yeah, yeah,
so
yeah.
now with that consideration being in place, what does that tell you about the higher time frame? The higher time frame is that one that shows you that single road to where you are trying to get to. It's always almost never it rarely misleads you. It rarely puts you in a position where it shows you what's not there, because it's the higher time frame, it's the highest time frame. So whatever moves you see on the higher time frame is stronger than whatever moves you see on the lower time frame. So now the right way to use the lower time frame is when you get your moves on the higher time frame and then you use the lower time frame to still trade in that same direction that the higher time frame has already shown you wants to go. Where using the lower time frame you start to misuse it is when you're trying to catch the buys and sells. Even though we're in a downtrend, you're trying to catch every single move. You're all over the place. It's only a matter of time before you get lost. Like I told you, the more you zoom in, the more you start to see houses, the more you see streets, the more you see neighborhoods. Before you know it, you are lost in the road, and then you start to zoom out again. So a small time frame can make you lost. You may get lost in that small time frame when you don't know what direction price is on again. So the higher time frame always puts you in a position where you want to be. It shows you what price is trying to do in the highest level, and then you can then use the lower levels to find your entry to still go with price to that direction is going to in the highest level. Does that make sense?
Yeah, yeah. You can move to the question. I get what I want. Very good what I want.
Okay.
Thank you.
Who's next? Let me see if anyone was there. I'm waiting for the next question. If you want to ask a question, just raise up your hand and or just talk. Open unmute yourself and just ask your question.
The
Can I
question
ask a
in the
question?
chat.
Sure.
I have a question. For example, for that pair Euro USD, for
Hmm.
example, it was in a downtrend, and then it broke like a swing high.
Hmm.
That's mean like you can enter like or you can enter in a swing trade if it breaks like the swing high, and that's mean it's gonna become bullish.
You're talking about here, right?
Yeah, for example, yeah.
Okay, so why didn't I call as you guys can see, I have my arrow here saying hey above this level price can go higher. But why didn't I call this trade? There are things you have to consider when you are calling a trade or when you're trying to catch a swing trade. You have to understand the risk and you have to understand why you're getting into the trade. Now for Euro USD, we understood that this high was what made this low. So for us to consider price to be fully in an uptrend, we needed to see this high get broken for us to now say okay we can now start looking for swing trades to the upside. So, but what happens here? What happens here is that we see clearly that this low price started to make higher highs and higher lows, and then this low caused the break of this high. Now, if you want to get into the trade here, you have to ask yourself, are you willing to have your stop loss all the way down here? Because that is where the stop loss is valid, right? Most people do is that they get into this trade because they are scared of missing out. They jump in and they have their stop loss somewhere under here, which doesn't make any sense. So you have to understand that even if you're using your stop loss here, you have to understand that it's not maybe it's not the best spot to have your stop loss. Also remember, this was Friday, trend was dying down. So you have to ask yourself, are you willing to have your stop loss under here? If you are not willing to do that, then you have to kind of let price see you have to kind of let price either give you another entry up in this zone. Let's say for example you don't take a trade and price starts moving. Then you can go to the 1 hour time frame and see if price is going to give you an ICC entry above here for you to then get in and catch that trade. Otherwise, you can just wait to see if price reacts, corrects itself into the zone, and then starts pushing up again to then tell you that the buyers are ready to push for you to get in and have your stop loss where it's supposed to be. Understand this. Understand that the reason why you put your stop loss is not because here is where I'm willing to lose on this trade. No, your stop loss is meant to be at a level. Sai said this in his last video. I don't know if you know him, but he says, and I've always said this before as well. Stop loss means invalidation zone. It means a zone where your trade gets invalid. So you want to place your stop loss at a zone where your trade is completely invalid. You don't want to place your stop loss where if price triggers your stop loss, you are still wondering if your trade is correct or not. You don't want to do that because that makes you then jump into trades for no reason. But if you place your stop loss at a level where you know, hey, once price gets to this zone and takes me out, that means that my trade now becomes invalid, and that means that my whatever reason that I entered this trade on has now been is now invalid, and I can't use that anymore. That's where you want to place your stop loss at. So if you are placing stop loss, don't just be placing stop loss based off on what the 5 minute time frame is saying. You have to place that stop loss so that it also rhymes with what the 4 hour is saying, what the higher time frames are saying. So on the higher time frame, what is this saying? It's saying to you that hey, this low caused the break of this high. So if you was enter a trade here where your stop loss needs to be valid, is under this high because this caused this break, and until your price takes out this level, that means that this uptrend is now invalid. So if you are not willing to have your stop loss here, just wait.
Thanks so much.
Got you. Next question. And also, just so I don't just to finish what I was explaining to you. Now we see price coming down here. How do you know when you want to enter? Now let's go to the 1 hour time frame or something like that. So when you go to the 1 hour time frame, you see price on the 1 hour is starting to build consistent lower low, lower high, lower low, lower high, and maybe price may keep making lower lows and lower highs. So let's say you want to get into an entry um under these levels. Where do you want to get to the entry? You want these lower lows and lower highs being built by price when it's finally, maybe it finally gets under here, or maybe under here or whatever. You want these lower lows and lower highs being built by price to get taken out, and you want to see price start making higher highs and higher lows before you start to get in. I hope I was able to get do justice to that question. So next question, if someone is asking the next question. This is a Q&A session. Please feel free to ask your question. Whether I think it's stupid, whether I think it doesn't make any sense, whether I think it's lame, ask the question because I'm probably not going to do a 5 hour call again, and it's going to be it's going to be hard for me to do this again. This is where you are supposed to come and tell us what you're struggling with. But I promise you, whatever you're struggling with, someone else on this call is struggling with it as well. So ask your question, no matter what you think about the question, ask it.
My question is based on the account and lot size. Can I ask a question based on that?
Sure.
Okay. My question is on a $1,000 account, what lot size is okay on $1,000 account?
Is it life account?
Yes, life account.
So you can I can't really tell you what lot size to use for your trade, right? The reason why I can't do that is this: I'm at a level in my trading right now where I can confidently risk 10% of my account on one trade because I know that I rarely go on three losses on a row. Talk more of going on 10 losses on a row. So I can confidently use risk that amount of my account on a trade. But you, I don't know what level you are in your trading. I don't know what your win streak is. I don't know what your win rate is. So you have to find your lot size based on your win rate. Let's say you have a 50% win rate. No matter, like, ICC is a very good system, but for some reason you win 50% and you lose 50%. That means using that amount of risk on your account may be a bit too much. Maybe you want to go down to 2%, maybe you want to go down to 5%, right? But one thing I want to tell you is this: if you don't have a 100K account, or a $50,000 account, or a 20K, just a very big account, if you don't have that, then just know that 1% is always not gonna be enough for you. if you have $1,000 and you're risking 1% of your account, that means you're risking $10 per trade. That is always not gonna be enough for you. So you want to risk in a risk. You want to take a risk whereby you are risking this amount of money to also make something very good that can help you scale your account, not so quickly, but gradually. But at least it's a bit fast. So for me, I would use 10%, but for you, I wouldn't advise that if you are not at the level where I am right now. Maybe you want to go using 5% per risk if you are that good. If you are not that good, maybe you want to do $25 per risk, right? So just your risk depends on how good you are. It doesn't depend on me. It depends on how good you are because it's your trading, it's your risk, it's your money, and it's your growth. So you have to understand where you are and risk according to where you are.
Okay. My question again is, where do you put your stop loss and TP? Yeah.
So for stop losses, as I explained, stop losses are meant to be where your trade becomes completely invalid. Let me use another pair to explain that. Let me use Nasdaq because we said Nasdaq. We may take this one next week. So Nasdaq, what do we see on Nasdaq right now? Let's say here on the 4 hours we see on the 1 hour Nasdaq has broken this high, but here on the 4 hours it's yet to break this high. So let's say next week comes and price breaks above this high and I get into a trade. Where would I want to put my stop loss? That means that hey, where I would want to put my stop loss would be either under these levels, that would be where like under this high or maybe under this one. That would be the ideal place that I would put my stop loss. Why do I put it there? Because obviously on this time frame we see clearly that it was this low that caused the break of this high. If I also go to the 1 hour time frame, you're also going to see that it was this low that caused a break of this high. So if you want to enter the trade, it only makes sense for you to have your stop loss under this low that caused the break of this high, or maybe you can also use here if you want to be a bit more conservative. But I don't understand the reason why some people, you may see some people weirdly, for some reason, they get into this trade. This is even a good one. This is even a good explanation. But there are some times where some people may get into this trade here and they have their stop loss around here. I don't understand the reason for I've never understood the reason behind that. Never ever. I don't know. I think they are so obsessed with using a small stop loss. I always say this: avoid using small stop losses. It doesn't mean that your stop loss has to be so big. It just means that you know want to put it where it's supposed to be, where it becomes invalid. So let's say if you are putting your stop loss here and you are risking $100, why not just put that stop loss under here, reduce your lot size so that this risk also becomes $100 risk. But I think what is the issue there is that they are trying to get one. They're trying to catch a 1 to 7 trade or a 1 to 5 trade. You have to understand that why you are chasing that 1 to 5 trades, you have to understand that hey, you are with the trend. As long as you stay with the trend, there's always chances. This is not the end of the move, right? As long as we stay with the trend, this high is not the end of the move. There's always chances that price can get to this high and keep going up. Why? Because we are with the trend. So you don't want to become so obsessed with trying to catch a 1 to 7 here. Your trade can still become a 1 to 7. Don't be greedy about it. Just put your stop loss where it's supposed to be. That's the first thing to do first. Stop thinking about taking profit yet. Find where your trade becomes invalid, and then as long as it's up to a 1 to 2, good. Make sense?
Yeah. Thank you.
Gotcha.
Yeah. Thank you
I think
very
there's someone
much.
that has their hand raised for a long time now. I'll check. Who's that person? Can you raise your hand again? I think it's Isaac. Uh,
Boss, it's me.
yes. Okay, come on. Talk to me.
Good evening.
Good evening, bro.
Thank you, boss. So actually, the reason why I lower my hand was the main question I wanted to ask is the question the guy also asked about management, risk management,
Okay.
trade management. So actually, uh, I've been losing consistently. I've been depositing. I've been giving to the markets back to back. So my challenges that I'm really facing is management and that confidence to hold trade. I can enter a trade with a snipe entry. I'm good at a snipe entry, but I cannot. I'm good at holding loose, but I'm not good at holding profit. I don't know. I don't know what just my problem is. Any small profit, I close trade.
So the way I was able to deal with that, because at some
But
point,
I started scaling. I started scaling my losing as if I want to add more so that by the time it now reverts to my direction, I will make a good profit. Before I know, my account is gone. So and when I'm in profit, I cannot hold. I can't even hold profit. I can't even hold. I don't have that urge to hold profit. I will start feeling like I'll start shaking like I don't want the market to start reversing on me to come back against me. Then I close the trade and the trade start flying. Then this thing is messing up my. I've blown so much account. I can make profit from Monday to Thursday, and on Friday the account is gone.
okay. So from what you have said right now, my guess is you have been trading for a long time. Let's say you have like let's say 2 year experience in trading, right?
Yes, sir.
Good. So what you are struggling with is you are struggling with past trauma where you trade this way in the past, but now you have found this new way of trading that works for others, but for some reason that thing that affected you in the past is still coming back to haunt you again. So now your job is more difficult than someone that started trading today. Your job is more difficult because the person that started trading today is someone that just comes to trading. They tell him this is how it goes. They don't have anything to unlearn. They just start trading and start doing what they're told to do or what they've learned, and it just starts going well for them. But for you, you have past load that you're carrying, or you have past trauma that you're carrying, and then you have to unlearn them to be able to learn something new. That is what you're struggling with, and that your job is more difficult than whoever started trading today. And that's why I tell people a lot that hey, someone that has 5 year experience is not better than you if the person is not profitable. This guy right now that has 2 year experience in trading is not better than this person that started today because he's just been repeating the same year over and over and over again. He's struggling with what he has learned in the past. So how do you be able to deal with this? First step is understanding this thing I just said now. You are struggling with what you know before, and you need to unlearn them to be able to start trading new. So how
Definitely.
do you know? How do you start trading new? How do you go about trying to do something new? It boils down to basics. For you to learn something new, for you to gradually start to become used to this new way of trading, you need to go to the basics and just do the very basic, which is trading ICC on the highest time frame, 4 hours. Only trade ICC when it appears on the 4 hours. Do it like that. The more you do that on the 4 hours for a long enough period of time, what you start to see is you start to notice patterns. You start to notice some things that happen in the 1 hour that every time it happens, trade plays out. As long as you have a journal, you start to notice patterns that every time you are in a trade and this happens, it doesn't go well, but this happens, your trade goes well. That is how you start to build experience into this new way of trading. You don't do it overnight. You don't just stop this thing that you are struggling with overnight. You go back to basics because what you are lost now, you are lost in the basics. You don't know what the basic is again. Now you get into a trade, small profit, you start to have that dilemma of nah, I'll never go broke taking profit, or that thing that they say at all na in bad pass for Nigerians, but for maybe if you're outside where they say you never go broke taking profit. Yes, you never go broke taking profit, but if you keep taking 0.5% profit, I promise you, you will go broke very soon. It's just a matter of time. So, the way you deal with this is by going back to base, going back to learning ICC new, and then sticking to only the higher time frame. This thing I'm telling you is not the sweetest way to do it. It's not the nicest way to do it, but it's the way that works. Me myself, I started training since 2019. Been a long time, but I only found a really good consistency in the way I trade around ending of last year till this year a good, and then I think I went on, I would say, ghost mode within the past 6 months. I've been on crazy run. So it didn't. I had to when I met Sai in 2021. That was when he was 18 or something like that. I struggled ICC then as well. I struggled with holding trades and then trying to close it. This same thing you just talked about now, I struggled with it. And the way I happen to deal with it is by going
Wait,
back to saying,
I'm going
hey,
inside, okay?
I have to
On the
stick.
Zoom call.
I have to stick.
Hmm? I said I'm on a Zoom meeting. I'm going
MLP,
inside.
MLP, mute yourself.
Hmm?
So
I
the
see
way
some.
So the way I was able to survive that stage is where I went back to basics, because basics, one thing people really always underrate the basics. But let me tell you one thing about the basics, or let me tell you one thing about simple things. It is very difficult to do simple things. That's the honest truth. It is very difficult to do simple things. You may find it crazy, but I can challenge somebody that I challenge you that from now to next week, before you take a trade, I want to see only one line in your chart, and I tell you the person can't do it for 1 week in a row, because all of a sudden they find need to mark up every single level on the chart. If they don't mark it up, they will not find any good entry. So it tells you that it is very difficult to do simple things. So go back to basics. The best way to do this basic is sticking to 4 hours. Stick to 4 hours for, like, let's say 1 month. I promise you, you will have less trades, but I'm sure you will catch 3 trades in a week during 4 hours. I'm very sure. As long as you trade gold, Nasdaq, US 30, and SPX. You will find 3 trades a week or two. Sometimes you may not find any. That's cool. But if you do it in a month consistently, come back and give me the result. I promise you, it's going to be very good.
Thank you very much, bro.
Got you.
The reason why I came to you, because I know it is you that can solve this problem for me, because I also noticed that you have been trading other concept for a long time before you who buy. And I wanted to ask you this question: that do you still trade fair value gap and other blocks?
So I dropped all those things because, like I told you, I went back to doing the simple things. I stopped trying to be perfect. I stopped trying to have the perfect, beautiful chart where I send my trade that I won and it looks so good when my stop loss is so small and my TP is so big. I stopped trying to be perfect. I just said, let me for once in my life do the simple things, even if it's 1 to 1, even if it's 1 to 1.5, even if it's 1 to 2. Let me just start doing the simple things. Let me see how far it goes, and that's how I'm here. If you do these simple steps, you will be here very soon. I promise you. So I traded, like you said, it's very good. I intentionally left everything on my Telegram from where I started to where I am now. If you go back to Telegram channel and scroll up, you're going to see where I started when I traded SMC, when I traded support and resistance. When I traded everything I traded to this point that I am in right now, that Telegram is indeed the $10 million journal. And until I get to that $10 million, it is the $10 million journal. If I get to 10 million, then we can change it to $100 million journal. But that Telegram tells you the steps where I started from this trading this system to where I am now. So for you, I promise you, just drop every other all those trying to, because the only reason you are using FVG is because you're trying to catch the perfect entry. You're trying to catch sniper entry because you came in. First thing you say that is that you are good with snipers. But funny enough, you are so good with snipers and yet you haven't made any profits. That tells you a lot of things. It tells you that this sniper you are catching, you may be catching it and feeling yourself, but it's just not working out for you. There's a reason why. So for once, for the first time ever, try something else. Try the basics. Try having that stop loss that seems a bit big, but still reach properly on it. See how it goes. It's going to be a very eye opener for you. I promise you.
Thank you very much.
Morgan, can I ask you a question?
Of course.
Yeah, thanks. I have just two questions quickly. 4 hours, you just see the trend, like you analyze what the market is doing, and you mark your charts on 1 hour time frame.
So
If I'm fine,
on the 4 hours, I see the trend. I also mark up the level on the 4 hours if it's clear enough.
Okay.
Example, 4 hours here is clear enough. So I mark out the 4 hours and I also understand, and then I go to the 1 hour and try to be in sync with the 4 hours. The reason why I use the 1 hour is because of this. The 1 hour is a very, I've said it before in my video. I don't know if you guys see my videos, but you need to follow me on IG. I drop on Instagram. I drop every single day. I drop trading tips. I drop the way I think about trading. I drop what I think about trading. I drop everything on IG every single day. So you need to find me there. My name there is ICC Mafia. So now, on the 1 hour time frame, the reason why I use the 1 hour time frame is because the 1 hour time frame is a very good middle range time frame. It tells you what's going on the lower time frame and it tells you what's going on in the higher time frame. It's kind of in the middle and it's a very strong time frame. I argue that it's one of the strongest time frames coupled with the 4 hours. 1 hour is a very strong time frame. So when it gives you an indication, or when it gives you a sign, it's usually really strong. It's usually really um I would say reliable. So couple that with adding the 4 hour view as well, you have a very strong indication of where you want how you want to trade.
Okay. Thanks so much. And for example, for that Nasdaq, your entry, because I see here that it broke a level, a swing high, you entered it because I can say I have an indication correction up on that level, that swing high.
Here or here?
Then no, not that one. It broke that swing high. Sorry, the line which is down. Sorry. Yeah, like you can just explain me your entry. I
So
think it would be easy. Yeah.
again, you need to find me on IG. I posted this breakdown on IG. I posted it when the price was here, when price is not yet moving. I posted the breakdown and reason why we took it trade, and I'll break it down here again. So, as I said, we have here, we have indication, we have price started to correct itself. We didn't get in here for obvious reasons. Price is yet to take out this high, so we don't know if buyer are starting to come into the market. So we're making higher, lower lows and lower highs until you notice that price came here and rejected. Now, if you mark out this level, you see that it was kind of equal lows with this previous level, telling you one thing, telling you that there's a reason why price buys here. There's a reason why price sells here. The reason why price sold here. The reason why price bought here. It means that here there are sellers in this zone, and here there are buyers in this zone. Now remember, price was making lower lows and lower highs. So lower low, lower high, lower low, lower high, lower low. So now this low took out this high, took out this low. So this high took out this low, but price comes at this level and couldn't break lower. That tells you one thing: there are buyers in this zone because obviously those buyers push price up from here, and price is back here again, and those buyers are pushing price up again, showing you that there are buyers in this zone. So where would you want to sell again when price comes under this level, and where would you want to buy? Considering that this is already an indication, a correction, price above here means price has taken out these highs. So above here, you want to start looking for buys. So how did we get our entries? If you go to the 1 hour time frame, I also broke it down. I also shared it on the group. I said on the 1 hour time frame, we see we have a really good indication, correction, and continuation. If you look here, you see where price made that indication. Price came here and kind of ranged a bit. This was Thanksgiving, so there was not much movement, but price was ranging around this zone still. Then price made that indication, made that correction, and back above here was our entry into the trade. We entered the trade here and we started to target. We could have targeted this high, of course, but we know that overall the higher picture, the bigger picture is that price is most likely headed to this high here, and that's why we entered the trade and we're looking to hold it all the way to this zone. That's why we got into the trade.
Okay. Thanks so much. Thanks so much.
Gotcha. Next question.
Okay. Sir, do you use 1 hour as your confirmation entry as your lowest lower time frame entry, do you go any lower than 1 hour, or you just confirm your entry on 1 hour then?
Sometimes I do go lower, but if you ask me, I'll tell you to stick to the 1 hour time frame. The 1 hour will give you the best ones. The reason why I say you should do that is that, like I told you, just like when someone asked me here saying, what lot size do I use? I told them that a lot size, your lot size or your risk depends on the level you are at. Now, do you go lower on the 5 minutes time frame or the 15 minutes time frame? I will tell you that you going down, me telling you to go down, depends on the level you are at. If you are at the beginning level where you are still struggling, stick to the 1 hour. The 1 hour will give you something more tangible, something more reliable. But if you're at that level where you are so good, then of course you don't even need to ask me this question because you probably know how to navigate your way around 15 minutes time frame. Sai sometimes uses the 5 minutes time frame. I'm not trying to be like Sai. I learned from him. He taught me a lot about trading. But you don't want to be like Sai. You don't want to be like me. You want to be like yourself. You need to give yourself time to grow into this person is. Sai has made millions of dollars off the chart. Making millions of dollars off the chart comes with a lot of experience, a lot of experience basically. So I'm not made that kind of money yet. I don't have the experience he has, so I won't try to be like him. Rather, I would learn from him and try to be like myself while trading the same system he trades. That's how to go about it. So if you ask me, I'll tell you to use the 1 hour time frame and let your experience tell you when to start going lower to the to other time frames to getting an entry off there.
Thank you very much, sir. Okay, sir. The last question: do you take partial from your profit?
So in terms of that, I think that's where you find some flexibility. It depends on the individual. It depends on whatever you want to do. So price gets to a point. Let's say you took a trade here. Price gets to here. You can take partials and hold the rest. You can decide to close. It depends. For me personally, I did like I have like multiple accounts on most of my like two of my accounts. I have like on two of my accounts. I closed all the trades. One of the accounts was a profit firm. I closed all the trades there. Why? Because I was already in a very good profit, and I wouldn't want to lose out on that profit. Also, in my personal account, I was already also up good amount, so I was okay closing the trade here, knowing fully well that hey, if price comes above here, I can find another entry and keep riding price all the way up. So, in terms of taking partials, but that doesn't mean that when you are in the trade, price goes small and you start looking for partials to take. No, you want to take partials at a level where you think okay, price has the can actually kind of retrace at this zone. Example, let's say as we enter the trade here, you took a buy trade here. Above here was also a good zone to take partials. Why? Because this is that indication level. This is where price gives that indication, corrected itself, and then back above here is the continuation to back above to back into the zone. So of course you can take partials here. And once price hits this level, makes a new high, then you start looking for where is price likely going to head to the next zone. Where is the next zone? Next zone is this level. So maybe price gets to this level, you look to take another partials, right? So taking partials is not when you are in profit. No, taking partials is when price gets to a key level where you think price have can actually react at that zone and start going down. So that's how you take partials. So in terms of that, like I said, depends on you. If you're up a good amount, let's say for example, there are some people that I saw this question from someone. He has $100 account. He took gold trade. He's up $300. Mind you, he has $100 account. He took a gold trade. Now he's in profit of $300, and he's asking, should I take partials? Should I close or should I hold it? I was like, bro, you are greedy because you obviously have a $300 account and now you are up by $300. Of course, you should close your trade because you are up a good amount of money. Even if you miss the rest of the move, I mean, your account is small. You are trying to scale it up, right? You are trying to come bring it up. You have made 200% of your account in one trade. Why are you still in the trade? So taking partials comes down to how much are you up? Are you up a good amount? You can't tell me you want to take partials when you are up by 0.5%, or you want to take partials when you are up by 1%. It doesn't make any sense. So you only want to take partials when you are up by a good amount, and let's say the amount you are up is a amount that actually helps your account grow very, very grow well. So that's when you take partials. So for that, most of my trades I hold to TP, but sometimes I may take specials.
Thank you very much, sir. What about the terms of BE and SL? Do you leave your trade to hit either SL or TP, or you break even?
I almost never go break even unless like I'm so up. And when I go break even, I'm not going break even because I'm going break even because price has made consistently made lower lows and lower highs, and so there's multiple new stop losses, but I just kind of go break even there. But I never go break even when maybe I enter a trade here and price is here and I'm going break even. I don't do that. I only do go break even when price has created a new high, made a new higher low, and then making a new higher high. So now I see, okay, price under this level can also be a new stop loss. So I'm going to go break even on my trade. So that's how I go break even. I don't go break even because I'm in profit. I go break even because price has consistently made higher highs and higher lows while I'm in my trade. But in general, what Sai explained that made me understand not to be going break even is that he explained that, hey, you have to understand that the reason why you entered the trade in the first place is because you're trying to catch a trend, right? You got into a trade where price made this reversal or whatever. You got into a trade, you place your stop loss under a level where you know if price gets under these levels, then my trade becomes completely invalid. So in that sense, why would you go break even? Because if price was to come back to your break even, then that doesn't tell you that your trade is now invalid. It just tells you that you are out of the trade. You have taken out break even. But you don't know if price will hit your stop loss. You don't know if it's invalid. You don't know anything. So that means that you shouldn't be going break even at that point because you have no information if your trade is now invalid or not. So you only go break you only go break even when I say, like, that's why I say I only go break even if I will. I only do it when price has made multiple higher highs and higher lows, and I see multiple levels being created by price, and I know, okay, if price was to take out these levels, that means that most likely sellers are starting to take back control of the market and they might go down. So I'll just go break even on that one, or maybe just that's how I basically do it. So I rarely go break even, but sometimes I do. Rarely.
And so, how do you enter your trade? Is it set order or you execute?
I execute. I don't use set orders because I like to see closures, especially 1 hour closures. It's my favorite closure. Even if I get to an entry when 15 minutes has closed above a level, I always go back to make sure that the 1 hour is closing above that level. I like seeing closures. Now, if you set orders, it only if I set an alert, if I set my set order here, it only means that immediately price came above this level, it triggered me. But I don't know if that candle closed above here or not. Candle closures means that buyers were able to push price above this level and they closed above this level, meaning they have control and they push price above the level. But price coming here, coming all the way up here and then rejecting and then closing under here means that buyers try to push price up, they fail to go any higher, and sellers push price back down into the zone, meaning that there are some sales here and they're not letting buyers come back up. That's what wicks mean. So in that scenario, I don't use set orders because price can trigger me and for no reason I'm in the trade when I haven't gotten those closures. But also, you can use set orders in terms of if you are in a trend. Let's say, for example, price but it's there are some situations that bring that in play. It's not every situation. There are some that brings that in play. So there are some that brings that in play. So I'll just say use execution. Rather use set alerts. When the price gets there, let the alerts tell you price is there, and then you go in there and see if the candle has closed above there or not. Personally, I only use execution. I don't use set orders.
And so the reason why I ask the question is that most of the time, after indication and you wait for the correction phase, after the continuation phase is coming and you and it's come with volumes And if it come with volume, it might just spike up without it might just break. It might just break and never come back again and continue going up because it's have already made indication and correction and now on the continuation phase. And when the continuation phase is coming, it might just come with spike volume and just spike up without waiting for.
The reason why you are bothered about that is because you are scared to miss the trade. If you are not scared to miss the trade, you're not gonna mind. I mean, it's cool. Price don't go in a straight line; it goes up and it goes down. Even if you don't catch that entry here, somewhere along the line, its price can give you a good entry. You just can't be scared of missing trades. You can't be scared of missing. You can't be scared of missing trades. You have to stop being scared of missing trades.
Okay, thank you very much, sir. Do you set and forget?
Sell and forget in the sense that I can enter a trade. I see the trade is moving an uptrend. I'm in a good trend. I just go on with my day. That's what I would say. I just and then come back later and see where price is at, see how price is moving, and see how I want to approach. So if that's what you call sell and forget, then I do. But if you say sell and forget in terms of where you enter a trade and come back next week, I don't do that.
No, what I mean is that in terms of where you set your TP, your SL, then you execute and
I do come back at end of every day mostly just to see how price is moving because price can also be showing you that buyers are weak, especially like we come to Nasdaq. Price came here, price just wasn't going above this level multiple times, and I was like, hey, I'm gonna close my trade here and then see how price move above here. That I closed it not because my trade is invalid, but because hey, I'm like I mean, I'm up a good amount of money, so I wouldn't want to lose the whole money just because of this solution. So I'm like, I'm gonna wait for this to end and for price to start making higher highs and higher lows again for me to get in. So, in terms of that, set I forget in terms of set TP and SL and say fuck it until everything. I don't really do that. I kind of see how price is moving and always come back at the end of every day to see if price is still in, if the trend, if the structures are still being held, or if price is starting to form a new structure.
that's what you do, sir.
Gotcha. Next question. You guys can't tell me you don't have more questions. Like you guys have to have more questions for real. We only 1 hour in. I don't know who is drawing on my screen, but stop it. Come on, boys. Next question.
Good evening. Can you hear me?
Yeah, I can hear you. Hello.
Hello?
Yeah, I can hear you. I can hear you.
Is it my network? Okay. Please, my first question is how do you know like a shift trend? How do you know that okay, this trend has gone bearish or this trend has gone bullish?
Okay, so
Hmm? Let me show you something.
what is an uptrend? When price is making a high, a higher low, a higher high, a higher low, a higher high. That's an uptrend. What's a downtrend? When price is making a low, a lower high, a lower low, a lower high. Listen, I'm explaining now. I've explained this particular question on YouTube a lot, but I'll explain it here again. Lower high, lower low, and lower high. Now, your question is, how do I know? No, come on. Okay. Your question is, how do I know when price has gone from this to this? Now, I explained something on YouTube the other day. That thing I called it break of structure and change in trend. They are two different things. There's a difference between a break of structure and change in trend. and I said when price make a high, a low, a higher high, a higher low, a higher high, a higher low, and then makes a higher high, and then comes and takes out these lows. This is not a change in trend. This is a break of structure. Price can easily keep going up from here as well, right?
Okay.
This is a break of structure, not a change in trend. So, how, when do you know it's a change in trend? You need price to make a low. So this is how you know it's changing trend. High, high, higher low. So price was making this uptrend, and then after it making this high, price takes out this low. Good. You need price to correct itself, respect this high is made, and then takes out this low it's created. That is what shows you that okay, we are starting to get that switch from uptrend to a downtrend, because now we have gone from making higher highs and higher lows and higher highs and higher lows to making lower low, lower high, lower low. Now, important point. Let's say price is making these higher highs and higher. And listen very attentively here. Making these higher highs and higher lows, right? Let's say price does this, right? And then price starts creating these lower lows and lower highs. Creating lower and lower high. Yes, it may be in a downtrend here, but remember, the low that took out this high, price is yet to break that low. The trend still remains
Mm-hmm.
bullish. So even though we are getting those
Yeah.
lower lows and lower highs here, the trend remains bullish. Why? Because this low that made this high, price is still respecting it and he has taken it out, and price can do all this and then starts going back up, right? So this,
Mm-hmm.
so
Yes.
that's different ways to go about. So a change in trend is when price makes a new low, makes a lower high, and then breaks the low it's made. That is what shows that price sellers are starting to build consistently to the downside. That shows you that trend is starting to change. Trend is likely to change. So
Okay. What time frame do you use for that?
you can use the 4 hours for that. If you use the 1 hour for that, then you have to know that you are on the downtrend on that 1 hour. But if you use the 4 hour, then you have to know that you are on a downtrend on that 4 hours. So the reason why I use the 4 hours is because once you're on a downtrend on the 4 hours, then you are most likely also on a downtrend on the 1 hour, 15 minutes time frame, and all the lower time frames.
My second question is, how do you know a valid break of structure?
A valid break of structure. A valid break of structure. That question does not make sense.
Closure.
Okay, because there's sometimes price will break a structure to the upside, come back, respect that low, but along the line, when price respect the low and keeps going back up, you might feel like okay, maybe it's ready to buy, and you enter. Sometimes enter blindly without confirmation, though. Actually, price will come back to sweep you out.
Okay. Do you have a trade where such thing happened so I can look at that trade?
I'm not with my iPad right now.
Maybe in your mind you don't can't remember any trade that happened on.
No.
So while your question may not be that clear, while your question may not be that clear to me, I think what you are saying is that um sometimes price makes, like, I think what you need to understand is this, right? Understand that, understand that price will always respect the structures. The moment it breaks structures, then it's likely that trend might change. Now, when you say, when do I know a valid break of structure or something like that, then
Mm.
I said the trade doesn't make sense because, like I said, break of structure is simply, you don't know if it's valid. You just know it's a break of structure. Like, let's say this, you just understand that BOS is just price telling you that maybe the trend is about to change. Maybe. It's not that it's saying that hey, it's just maybe. So let's say price is buying like this, doing this. Then price
Mm-hmm.
comes and takes out these lows.
Mm-hmm.
Then maybe price is telling me hey, maybe trend is likely to change. Maybe start to come to the market. So let's say I start to see price start building higher highs and higher lows. Now I can take maybe a buy and know that I'm targeting here and
Mhm.
expect that if price doesn't break here, that means there's chance that we might see this and
Push.
this. Don't know if that makes any sense. So
Yes.
the point I'm making is that I don't know what you mean by a valid break of structure. I just telling you that hey, break of structure is price telling you that maybe sellers are starting to come into the market. Maybe the
Okay.
correction and then breaking of this low confirms that maybe, that tells you hey, okay, sellers are actually starting to come into this market, right? So that's how I look at it. So when you say valid break of structure, I don't know what you mean by a valid one. I don't know. It's only if I trade it that I say a valid one. I don't. I just be like, okay, price broke this low, but then let's see how price progress. Like it depends on the situation that price is on or the scenario. That's why I ask you, do you have anywhere it happened so you can go back to that particular price level and look at it?
No, no problem. I have another question.
Go on.
When the correction is happening,
Hmm.
sometimes the correction doesn't go deep into like that level
Yeah.
before price tries to start pushing back up.
Yeah. So
How do I did that? Okay, I can enter this trade now.
okay. So let me look for a level where that happened. Let me use the 4 hours and then trying to find a level where that thing just did not happen. What I'll tell you is this, right? When as you are kind of at a level where you are still learning ICC well, you're still getting in. What I'll tell you is when price doesn't correct back down to the level where I made that indication from, don't take a trade. Just cause price didn't correct all the way down there. Or where you can get in, just to kind of also give you a response to your question is this. So let's say we have this level where price came, so price makes this indication, right? And then price corrects. So let's say price starts building down, and then it didn't come under these levels. So let's say it came here, and then it starts doing like this, making this, and then starts building uptrend here. Then you can trade this. The reason why I say you can trade it is because as you can see, as you can see, the low, these lows that made this low, this low, these lows that made price to go down here is starting to get taken out by price, and also you are getting in on this trade during session. So we are in session, and price has gone from making lower lows and lower highs to making higher highs and higher lows. So I guess you can take it, but my best advice I would tell you is that as you are still learning, because you learn this by experience, as you are still learning, any trade that doesn't come all the way in back into the zone to buy back up, don't trade it. That's like the best thing I'll say to you.
All right. Thank you very much.
Gotcha. We need more questions. We need more questions. We have time. At least this class should be up to 3 hours.
Me, I have a question. I
Go
have
on.
a lot of questions because I'm trying to learn.
Go on.
Yeah, you talked about something like your time frame should be aligned. What do you mean? The entry should be this, like it should look the
Video.
same in every time frame, or is the trend?
I didn't really get your question. Sorry, I was a bit
No, I
chatted.
was just saying, when you say like, even Sai was saying that like the time frame should be aligned before you enter trade, stuff like that. You mean the trend should look the same in all the time frames, or the when you're gonna the entry should look the same in every time frame?
It's not really that the entry should look the same on every time frame, but the point that he was making there is where he's telling you that, hey, it's not like the entry will look the same. No, that's wrong. It's that he's telling you that, hey, if 4 hours is making higher highs and higher lows, and you want to get in, you want to get in when 1 hour is also making higher highs and higher lows, and 15 minutes time frame is also starting to make higher highs and higher lows. But if you are on the 4 hours and the 4 hours is in an uptrend, which is making higher and higher lows, the 1 hour is also an uptrend making higher and higher lows, but the 15 minutes time frame is making lower lows and lower highs, then you kind of want to wait for that 15 minutes time frame to switch from making lower lows and lower highs to them making higher highs and higher lows for you to be in the trade, because that means that you are now in a trade where all time frames are pointing to the same direction. That does not mean that all of them has to be in the same, looking the same thing. The same. No, it doesn't mean like. Although if you zoom out, it's going to look the same thing. Of course, if the 4 hour is showing something, if you zoom out on the 50, on the lower time frames, it's going to look the same on the when you zoom out. But it's not like they have to look exactly the same. It's just that all of them has to be pointing to that same direction. They have to be pointing to that uptrend. All of them. That's when you want to be in the trade. When all time frames are pointing to that same direction. Does that answer your question, or do I need to go more in depth?
Thanks. I think I understand now. Thanks.
Okay.
Okay, thanks so much.
Do you have more questions? So you are learning.
Yeah, I am learning. I think I did like 400 hours. I tried to learn ICC. Yeah,
Okay. 400 hours is a
yeah,
lot. How did you do
yeah.
that?
Like I don't sleep. Yeah, but yeah, thanks so much, Morgan. You really helped me out, to be honest. Because sometimes, I'm gonna be honest with you,
Hmm.
a lot of people, some people, they don't understand Sai, to be honest. Sometimes you should be explained by someone who understand what you're trying to understand. Yeah, that's what I wanted to say. But you helped me a lot to understand a lot of stuff. Thanks so much.
Okay. Just try not to be like Psy, cause like on my IG, my name is ICC Mafia. There are some times that I want to make a video. I kind of watch Psy's video style. But I'm like, if he's doing it and it works, I'm just doing that way. I try to copy what he does, but you need to understand that you can never really copy someone. You can never really be like someone, no matter how hard you try, because it's not possible. Just say it's not possible to be like someone. You can't trade the way this person does. Like you can't trade exactly the way he does. There has to be some level of the person you are will start to come in at some point. The person you are will come in. Either it is that um so you have to like understand who you are, understand where you are on your journey, and try not to drive away from your identity while trying to trade the way Sai does. So Sai is someone that trades sometimes he goes to the 5 minutes time frame. Me, I admire it a lot when he does that. I'm like, that's a good entry. I don't know how this nigga saw that earlier, but that's a good entry. I was saying this then. That's a good entry. I don't know how he saw that, but I can't do it now. That is me not driving away from who I am, but also understanding that, hey, I would like to learn that someday, but I understand that I'm at this level now and I need to slowly grow into what I want to be. So you need to start from where you are, understand where you are, start from there, and then when you do that slowly, you're going to let your experience will build you up into becoming more and more and more and more and more better every day.
Okay. Thanks so much, Morgan. Thanks so much. Yeah.
Gotcha.
Good day, Mr. Morgan.
I got hello man. MLP.
How's it?
Good, doing
Yeah.
good, doing good.
Yeah, I have a question, yeah.
Hmm.
I've been I've been trading I found out about Sai 4 to 5 months ago.
Okay.
And so far things have been clear. Like I'm new. I just started trading this year, 5 months ago, and I found out about site, and things has been a bit much clearer. But I still have some things confusing me.
So
I don't
if
know
you
if you can.
go on, go on, go
I
on.
don't. So yeah, I don't know if you can go on your chart, on your Bitcoin chart, or so I can ask my questions.
I'm curious though. If you found Sai 4 months ago, how did you find me?
Oh, oh, I was watching his videos. So I saw where he showed your screen or ICC
Oh,
Mafia on your Instagram. So that's how I found you.
okay, okay, okay. This is Bitcoin
Yeah,
chat.
that's how I found you. Yeah, so if you can, I was on the Bitcoin trade yesterday, Friday. So Bitcoin made the last low it made, yeah.
Yeah.
If you can you go to your 1 hour time frame, please. Okay. So the low it made there,
Yeah.
not the one, the previous low. Yes, yeah. Before it started correcting, I want to know if the price comes down again and breaks that previous low, because I do mark up my chart at the 4 hour, or mostly the 4 hours. That's why I mark up my charts. So the price, what price is doing now? I want to know if it breaks this low, the previous low. Would you call that a continuation, or is it another indication the price is going down?
Well, if you're looking at it from this angle, where that's probably where you're looking at it from, this angle,
Yeah.
then I guess you can say,
Yeah.
wait, let me, um,
Do you think is it making what is doing now? Is it making a correction? Or if it breaks down the law, is it another indication, or is it a continuation?
funny thing, I'm actually in this trade on my account. I got in around here. Oh, the one we got,
Yes, yes, yeah,
I had a
me
very
too.
good entry. So I got in because overall it's a downtrend. And the 4 hours price
Yeah,
wasn't breaking these highs. So I'm like, instead of creating lower lows and lower highs, so I got in. But on your
yeah.
question where you asked me, would this be a new um continuation of
Indication.
downside? So what
Yeah.
I would say is that I guess you can call it that if you are willing to have your stop loss all the way up here.
Yes, that's where my stop loss is. I got into the trade the same place where you got into.
Okay, so if the stop loss is here and price breaks
Yeah.
under these lows, of course that would mean that price is back under this level as well. Because what we see here is that under this levels price sold off. Under this same levels price sold off. So if price comes under this level again, they can expect price to sell off.
Okay. So I can call it a continuation
You can't, yeah.
or indicate. Okay. Okay. So yeah, that's my question. One more question, please.
Go on.
So when I go to do 15 minutes time frame, so that's where I check out my higher lows and my high high before I take the entry. But if I go to the 1 hour time frame, I see it's not making, maybe it just made a higher low, just one higher low. It didn't make the next higher low.
So
But
I think I get what you're trying. You are kind of watching price to see when price is looking like it wants to reverse, for you to then
yeah.
say, I'm gonna close my trade. I guess that's what you're asking, right?
No, 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 not closing the trade, like taking the entries. I'm talking about entries.
Can you ask the
So
question again?
yeah, so now let's say now if you want to take an entry, yeah, let's say first things first, price makes an if you, on the 1 hour time frame, price makes an indication. You go to the 15 minutes time frame, you see the indication. Then the 15 minutes time frame, it makes a correction. Then it makes it makes a correction, then it makes a continuation. Now, before I take my entries for that continuation, I wait for it to make a little higher, to make another higher low again before I take my entries. But I noticed in the 1 hour time frame, price is not giving me like indication, correction, continuation. It's just giving me a straight indication. But in the 15 minutes time frame, I'm seeing higher lows.
So what's your question there?
So my question now is it right to take the trade if in the 1 hour time frame is just showing me a straight long indication, but in the 15 minutes time frame I'm seeing my higher lows. Can I still take my entry, or must I confirm my higher lows in the 1 hour time frame before I take that entry
So that was why I said the higher time frame, like the 1 hour and the 4 hours, is better because of this
to
same
take
reason.
entries? Yeah.
Because of this same reason you just said now, that on the 15
Okay.
minutes time frame you are seeing indication, you are seeing this, all this, but on the 1 hour it's just showing you that this is still just one candle. So
Yes, exactly.
that tells you that maybe it's a 15 minutes time frame indication or correction, but it isn't really visible on the 1 hour. That means it may not
Yes.
even be existent. So you
Yes.
want the 1 hour to show you that for you to get in. So basically, whatever you are seeing on the 15 minutes time frame, you want the 1 hour to be portraying something similar to that before you kind of take it seriously that much. And that's, but
Okay.
right now on BTC, overall we're in a downtrend, right?
Yeah.
Overall we're in a
Yeah.
downtrend, and I guess every sell position, but you need to also understand that different pairs move different ways, especially for BTC
Okay.
right now. BTC can do come under these levels, spike up to this zone, and start spiking down again. That's how it moves sometimes. It goes crazy. And that's not just for
Yeah.
BTC. For Nasdaq, it's gonna be a bit different. For gold, it's gonna be a bit different. So when you're
Yeah.
making these decisions, you really need to understand the pair you are trading and make sure you understand how the pair moves. If it's a pair that
Mhm.
can actually spike up and spike down again, then you don't want to be looking to take a trade on that 15 minute time frame indication, correction, and continuation, because price
Mhm.
on this pair can move, this pair can move this way, right? So you need to understand the way the
Yeah.
pair moves for you to make some sort of decisions on it. So you don't want to
Yeah.
just jump into it because it should. So for the fact you said you are already in the trade here, I really don't see anything for you to do anything. Just hold your trade, man, and see wherever the profit is
Okay.
good, close. If you want to keep holding it, then understand that okay, I want to keep holding it, and I don't mind losing out on this profit I have. Then cool, keep holding. But I don't think you need to do any other thing. You don't need to catch all the moves, because obviously you see that it's
Yeah.
not that clean. Because if it was that clean, moment price came under this level, it should be going down. But you see how price
Yeah.
came under here and then came back up here again. That's BTC for you, man. It
Yeah.
can it can go crazy
Yeah.
sometimes. So you wanna just make a decision, get in the trade, and do nothing else.
Oh, all right. All right. Thanks. Thanks a lot, man. That helps.
Gotcha.
Sure.
More questions? And more ears, man. We have time. We are like 1 hour and 30 minutes into the call. We have time.
Hello, hello, good evening.
Hello, right here.
Good evening.
Hello, how are you?
Fine, fine, sir. But please, so far I really understand so many things.
Hmm.
But please, can you say something about like 10K profit accounts, like the risk management of that? Can you say anything about that?
So recently, I bought a 10K prof firm. I've been gotten a lot of questions asking me about prof firms, and I'm like, let me try prof. I never believed in it. I said, let me try it. Let me try and buy with this prof, and let me see how it goes. I buy. I pass phase one, pass phase two, get funded, make first withdrawal, make second withdrawal, and I'm like, this actually works. So I'm buying 50K now. So, in terms of my experience, how I've traded it so far, what has been the result so far? So far, what I see is that so far what I see is that I trade, and what I risk per trade is 1%. I only risk 1.5% of my account on a trade when I'm already in profit. So let's say I win my first trade, I'm up 2% or I'm up 3%. On my next trade, I can say, okay, let me risk 1.5% of my account on this next trade because it looks good and I'm in profit. Now, if I'm in drawdown, I won't risk that 1.5% because I'm already in drawdown. That is just called proper risk management. So you don't want to come to the prof firm and because you have to remember what I understood is that they gave you a $10,000 profit account, but they told you that you
Yeah.
can't lose 10%. That automatically means
Yeah.
that what they give you is a $1,000 account and not a $10,000 account. So you have to treat it as a $1,000 account. And if you are treating it as that, then $100 per trade is already 10% risk per trade. So do you want to go higher? That means you are about to go 20% risk per trade. It can be a bit risky. So you just have to understand that hey, it's a 10K, but actually it's a $1,000 account. So you treat it as a $1,000 account. Risk properly, trade, look for. I highly recommend 3 trades a week. When you have a mindset that say that I will only take 3 trades a week this week, it will really make you avoid all the trades that are not that good. The reason why you will avoid it is because you know that because of your discipline, once you hit 3 trades this week, you are done. And for that reason, you will only be in a trade where it really, really looks good. Sometimes I will say I'll take 3 trades a week, and Monday to Thursday, I haven't seen a trade that I like. And on Friday, I see 3 trades once. I take it all and I win it all. Good trade, good win, good week. We call it a week and we come back the next week. That tells you that it can take a while for you to wait for a trade. Of course, it will take a while because you're watching the 4 hour time frame. For the 4 hour time frame to form, it takes some time. But once it forms, it's strong. It's a strong time frame. So when you do wait for it to come, and when you wait for it to form, when it forms and it comes in play, you need to just be calm and wait for it to really show you what it wants to do. Right? So the point I'm
Okay.
making is that when you buy a 10K account, understand that it's a 1K, not a 10K. And because it's a 1K, treat it as a 1K, risk 1% per trade. Try to get that consistency to be able to go on live account with a good money, and then in that live account you can then be a bit more flexible and more free on how you want to approach.
Okay. Thank you so much.
Gotcha.
But can you say something about like what like lot size recommendation?
Lot
Hello?
size.
I understand that I understand something you said about lot size the first time about placing your lot size at the swing low, at the swing high. Hello.
You say lot size or you say stop loss? I don't understand.
Like I'm asking about lot size.
Hmm.
Like if you can say something about the lot size. But that's what I'm trying to explain to you that I understand something you said about placing your SL. Because your SL that would determine your lot size.
Yeah.
If I'm right.
Hmm.
So I understand just now that on this call that I understand that where you're supposed to put your SL is at the swing high or swing low. Yeah. I think that should determine my lot size, right?
Hmm.
So,
So,
so
go
please,
on.
so can you say anything about like lot size recommendation for like 10K account?
Depends on the prop. The prop I used it was funding pips. So for most of my trades, especially if it was like a Nasdaq or gold, which are like strong, but most of my lot size was usually 0.01, 0.02 because that 0.01 can be a lot on that on those props. And like if you put your stop loss, it's going to be $100 risk. So I just put that 0.01 and I see that okay, this 0.01 weirdly enough it is $100 risk on that on this trade. So I'm like okay, let's go. And I think that's even one of the reasons why they pay me out so good. I don't experience any issues because maybe when they kind of when you request for a withdrawal, they come and look into your account and they see that this guy has been using 0.01, 0.02 and he's making good profit consistently, so we're gonna pay him out. So if they came into my account and they were seeing things like one lot size and then there was no consistency or like on one lot I win one trade and that one trade I'm trying to make a withdrawal, it will feel like a lucky trade that I just got lucky and I'm trying to make a withdrawal of that. But because I was constantly using that 0.01, 0.02, mind you, I'm not using it because it's a small loss. I'm using it because when I place my stop loss, that's actually $100 stop loss. So now I have a higher account. My lot size will of course increase, right? So the risk, let's say I've seen where the stop loss is. Okay, I want to risk this amount of money. So for me to place to risk this amount of money on this trade, how many lot size do I need to use? So that's how I just find my lot size basically. Where it needs where the lot where the stop loss needs to be, it needs to be under a level where your trade becomes invalid. So under a swing low or a swing wide is the safest place you want to place your stop loss at.
Thank you so much.
That's you, man.
Morgan, me have a question.
You go on.
Uh, you see, it's just a question to be sure I'm doing the right thing.
Okay.
But I'm on demo now.
Okay.
You see, like that on crypto.
Uh-huh.
For example, sorry, it's sad because I can see, like from that level where the market is now. For example, I enter just to test if it's gonna be a good trade because it's BTC, because it's above that swing high, where you mark the line. You see that line, that black line. Sorry, kind of black. Yeah, that line. For example, that is a good entry on BTC
Uh,
above that line.
1 sec. Let me really understand. Let me make sure. Okay, it's still recording. So hold on. Sorry. Hold on. Let me make sure we are still recording. Okay. So you are saying I didn't get your question. You may have to repeat it again so I can really
Oh,
understand what you're trying to say.
it's possible that I show you and I delete it, like I can write it on Zoom.
Do you
It's
know how to
possible.
write?
Yeah, I see like a pencil. It's gonna
Uh,
be more easy.
go on, go on.
Okay, thanks. Gonna show you. Sorry. Yeah. Okay. Okay. I had I have that same line. Me, I was saying sorry. I was saying that above this level,
Mm-hmm.
that's like yeah, because I had that line. Then the market is above that level.
Mm-hmm.
That mean I can buy. Like I can buy.
Yeah, you can say that that means you can buy if price was also building consistent higher highs and higher lows. But if you look here, if you also go down to the 4 hour time frame, delete your pens if you can.
Sorry,
Okay,
not
now
delete them.
if delete. Okay, so now if you look here on the 4 hour time, why do I think that thing that the sales are still valid? Here on the 4 hour, you see that price is struggling to break higher. It can't break above this level. So you can't say that you want to keep buying because price is not breaking up. For you to say, okay, I can buy, you want price to be above this level for you to target the next zone, which can be around this zone, right? But right now we see clearly that price is not breaking this level, and that means sellers are at this zone and they can push price down. I don't know if that's making any sense. So in terms where you're
Oh
saying
yeah.
that you want to buy, you want to buy. Looking at this thing I'm showing you now, do you still want to buy?
No, because the 4 hour time frame is not didn't
Exactly.
break that swing high.
Because it's not showing you that these buys you want to get into is clear. But let's imagine a situation where we then see this make this high here. Now, would you now say, okay, price back above here? Would you now buy? Of course, you would buy because why would you buy? Because now it's looking like buyers are starting to build a consistent trend, and at least you can take this price from here back up to this zone, or maybe potentially back up into this zone, right? So you want to like I always say, cleanest trades. Looking at this, buys are not clean. You don't want to be in a buy position. Just looking at this now, you don't want to be in a buy position. So it matters how you see it, how you kind of break it down for yourself. Really understand where the buyers have a chance and where the sellers have. Just because you want to buy does not mean that sellers don't have a chance anymore. You want to understand where the sellers have a chance, understand where the buyers have a chance, and then find the best spots you want to get into the trade.
Thanks so much, Morgan. I see it now. Yeah, thanks.
Got you. Next question. We got time, man. Got a lot of time. Let me check the charts. I don't know if is there anyone asking questions on the Telegram. Let me see the Telegram.
Yeah.
Uh,
Morgan, me, I'm gonna just what you explained me. That's why you can't just use one time. You should always use those both, because if, for example, you just use one time frame, a 1 hour time frame, it can be so risky. I understand now
Yeah,
because on 1 hour.
it doesn't
Mhm.
even make sense to use only one time frame. I mean, you are like I said, look at the 4 hours, look at the 1 hour, and look at the 15 minutes time frame. One second. Sure, you know, so you the show for this screen without clothes. Then they change clothes. So sorry, I was a bit started. So I'm saying it doesn't even make sense to use one time frame all through, right? You can use the one. You have to like okay, we said where you want to see all time frames kind of move in terms of like you want to see all time frames aligning together and showing price going on the same direction. So imagine you using one time frame. That means you are using only one eye. You wanna move around, just see what all time frames are looking like and see if hey, are they really all syncing and looking like they're pointing to that same direction before you kind of get into the trade. So using one time frame is not the best. I'll just say 4 hour, 1 hour, that's good. If you want to go lower, 15 minutes time frame. That gives you that balance.
Yeah, thanks so much. Really, thanks so much.
Got you, man. Next question. Next question from anybody. Anyone got another question so we can talk about it. So another thing I want to say for the people that just I'll post about this on Instagram as well. Now another thing I want to say for people that just started trading is you want to be realistic with yourself and realistic with your trading goals. Because one problem people do is that they come into trading and because they have seen this guy make these millions of dollars or they've seen this guy make this amount of money, all of a sudden they think themselves can make that amount of money as well. Although they just started trading recently. So one thing that Sai taught me that I think works a lot is this. He says let's say you start trading today and so far you have made, let's say in your job you are doing a job before you started trading, and let's say in your job you make $1,000 a week or a month. Let's say in a month you make $1,000. Let's say you make $2,000 in your job a month, 2k in your job a month. If you are Nigerian, let's say you make 100,000 naira in a month in your job. Now, when you're in trading, your goal is not to change your life. Your goal right now is to make that same amount of money you make in your job per month. Your goal is to make that same amount of money in trading per month. So if you make 2k per month in your job, when you come to trading, you want to make 2k per month in trading consistently. Why that? The reason why you want to do that is because you want to be able to then say, okay, now I have made enough money. It's for you to be able to say, okay, now I have made enough money. I have saved up enough money from making money in trading. I have my 4 months of expense saved up, or I have my 6 months of expense saved up. Now I have found, or I've also found some consistency in making this amount of money. So now I can quit my job and focus fully on trading. So your main goal for the first time you start trading, or if when you start trading is when you start making money, is your main first goal is to replace your job with trading so that you can focus fully on trading. Because after you have replaced your job with trading and now you are not focused on trading, you can then slowly start trying to scale your account higher. But people come in there and they have this unrealistic goal. They don't even have consistency yet and are trying to make it $10,000 in their first month. It's not going to work. In fact, you're going to lose that money you came with. So you have to have a realistic goal. Understand that you are looking for some consistency, and when you find that consistency, your first goal is to replace your job with trading. And when you now do that, that is when you now want to start talking about trying to scale your account, because now you have found some consistency, you have found your trading method, you have found the direction, bro. So now you want to talk about scaling your account. More questions?
Yeah, I have a question.
Okay, go on, bro.
So for
let's say I want to start like trading on my personal account. So what account size do you like suggest is the right account size to start trading? Like what account size do you suggest?
You say if you want to start trading now, what account size would I advise that you start trading with? Is that what you said?
No, let's say like I'm building capital on the side. So what account size is enough for me to start trading on personal account? Let's say I've been trading prop firms and I'm starting capital or I've been saving up capital.
In
What
in the
account?
in the prop firm, are you making money on it?
No, I just like started trading prop. I'm just saying I just started trading prop firms.
I would say I would say 2K to be safe. I would say 2K. 1K is also a good start. $1,000 is a good is good. 2K is good. 3K is good. Just know that it's you require as a small account regardless. So, but that's a good start. 1K, 2K, 3K. What's your location?
Nigeria.
1K, 2K is a good start. You can start from there and then slowly scale up. Even if you make $100 to $200 a month off trading,
Yeah.
that's
Yeah.
that's that's a good that's you may not be doing as big as others are doing, but that you are doing well for yourself if you have that account set and making that amount of money on it every month. So slowly, just understand that because you're making this amount of money today doesn't mean that's what you make tomorrow. You just need to
Yeah.
find that consistency, and as you are finding that consistency, you are going like this slowly, and then before you know it, it starts really really going up because now your account is going up gradually, your risk is increasing, and before you know it, you're on the way up, you're going crazy up there. So the reward, the amount you're making off trading can really go from 0 to 100, but it starts from that consistent. It didn't actually go from 0 to 100. It went from 1, 2, 3, 7, 9, 14, 18, 37. Like that's how it goes slowly, but then before you know it, it starts to take off. Exponential growth.
All right. I have another question. I have another question.
Go on.
On on like the psychology of patience and grief, can you like give your own take on it? 'Cause I know that this to do. I know I'm not supposed to do this, but I still do it. I know I'm not supposed to take this trade. I know I'm not supposed to risk this amount, but I still do it. So I don't know. Can you give
So
your
in
own
terms
psychology?
of patience, the way I think was very effective for me to do. I think Sai helped me deal with patience a lot, and where he did that job for me is when he explained to us two things. The first one is that you have to understand that every trade you are taking is not just a trade; it's an investment. You are investing into a position. So before you invest into that position, everything really has to look good for you to get in. And now when you get in, you understand where you're targeting, and that's one thing. Now, secondly, you have to kind of be grateful for having the opportunity to be able to trade. Many people want to be in your position. Many people can't even get in a trade and they're in profit. But here you are, you can get in and you are in profit. You have to be able to appreciate the fact that you are able to trade, appreciate where you are, understand where you are in your journey, appreciate it, and always understand that with steady discipline, with steady execution of the right things, you are going to get to the next level in no time. These things
All right.
help you get shape that patience, and then also you have to understand that if you have a small account,
Yeah.
and that's why you are a bit impatient, because if you notice, if you can be able to afford to risk, let's say you are, let's say $10 for you is nothing, and you are in a trade and it's in $10 profit, you see that you are just you hold that trade without feeling anything, you don't mind. But then if
Yeah.
$100 is a big money for you and you are in profit of $100 in your trade, you see yourself sweating because now you are in a it's a big money, and now you can't lose that money and then you are sweating. So you want to always risk what you can afford to lose, what you don't mind losing at all, and then when you risk that, you kind of let the trade play out. Find the trade, understand why you are getting into a trade, and then let it play out. That's what I don't really have a particular this do that to deal with on patience. All I just say is understand ICC, understand the concepts, understand the level where you got in, understand why you got in, understand the trend, understand your targets, and just let the trade play out. I posted something on X. I don't know if the guy that brought it up is here as well, where I said you should need to stop cutting your wings before you fly. You need to take the trade, set the alert, and let it all play out. If you can't see yourself trying to hold the trade, enter the trade. When you enter it, put stop loss, put TP, and delete MT5 on your phone. I don't know if you can do that. If you cannot do that, find a way to take it off your phone, take your mind off it. But just as long as you are letting your trades play out, because you only get to understand what happened, to get data that you can use to help
Yeah.
yourself when you let those trades play out. If you don't let it play out, you can't get data that you use to approach the next trade.
So do you journal your trade? Do you journal your trade?
Which do I journal my trades? So when I started, I used to journal. That's why in my link on the group, on the Telegram group, on the bio, there's a main stack link there. If you enter the link, you will see a journal templates there. When I started trading, I used to journal a lot. I used to journal every trade, reason. But now I don't do that much again. I kind of just go. I my wins are so little now though, so I don't even see need to go back to anything. But I just kind of just go back to the trade, see why I entered the trade, see what happened, and then just move along. I don't like journal it anymore, like in terms of writing it down and all that. But when I started, like let's say early last year, I was journaling my trades, bro. I was journaling. Oh, that's why I have that link there for people that want to journal their trades. Journaling helps you a lot. Journaling helps you understand where you are, helps you see where you are trying to get to. Helps you see the reason that is holding you back, written in your own handwriting. That's a big thing. You see what is holding you back from making getting to this level in this trading. You see what is holding you back. You see it in your own handwriting. Because if you take the first trade, you wrote down why you closed it, what happened, what you felt in that trade. Second trade, third trade. By the time you take 20 trades and you go back to each and every one of them, you start to see patterns. You start to see reasons that align. You start to see some things you do that even you don't know you do. So your journal is like right. Who is? I'm gonna remove somebody from this call. So so my point is that what was I even saying again? Um, well, I was saying something, but I've forgotten. So I was journaling my trades early on. This journal, when you journal it, you see yourself writing down what is holding you back in your own handwriting. So that's why journal helps. If you are starting out, I highly recommend journaling. Some will say don't. I highly recommend journaling. If you are still on the demo account, cool. Try to put some money on a trading account, trade a very small account. Try to get that life experience. Try to forward test. Don't back test is cool, but try to forward test more. You need to experience that emotion, experience that emotion of I want to close this trade, but then you try to hold it as much as you can, hold the trade and let the trade play out. Like do all these things. You need to experience all these things because that is the only way. The only way you can get to the next level is if you experience this thing. You can't get to the next level by hearing me talk about it. You can't get to the next level by watching videos. You have to experience it and get through it. That's the only way out.
So in terms of holding the trade,
Hmm.
when you just opt out of a trade, like you say, okay, I need to opt out. The trend is changing or something. Or when you decide to opt out of a trade, what are the signs you see that tells you that okay, I need to opt out of this trade because it's not, or you maybe just because of your intuition. Your intuition is just telling you, or maybe you see signs like
Wait,
what
you
what
say
is your standard
what I see
opening
that
market?
makes me want to close a trade I'm already in? Is that what you're saying?
Yes, yes.
So first of all, when I see a trade in terms of ICC indication, price made an indication for me, price made a correction, and then back above the level, I'm in the trade. Then first things first, I am not closing that trade until it gets to that level where the price has already made that indication that price wants to go. So when price gets there and breaks it, now you have to understand that at this level, you are now on your own. You have to be flexible. You have to watch trend. You have to see if trend is still continuing to push up to the upside, or if they are starting to see a change. Let me give you an instance. Where which instance am I gonna use? So let's say let's say this. I'm going to have to cherry pick here because I don't have a better. So let's say this. So let's say we see price make this indication here, right? So we see price made this indication. Price then corrected itself. After the correction, price then starts going up. So now let's say we enter the trade here, and then price gets to this. At least when we enter trade here, I don't close it until price gets to this zone. Now price
Yeah.
gets to this zone and breaks it. Now I understand that now price has broken this zone. I'm on my own now. I'm not just following structure, following what is structure showing me, what is trend showing me. Is trend starting to switch. So let's say we go to the 1 hour time frame, and on the 1 hour you see you took a trade here and price gets to this high, and you see price making a high, a like making this high, and then here you see price kind of fail to make a new high and starts building downside, starts taking out these lows. Maybe that's your sign that hey, maybe you don't want to still hold this trade longer. Also, if you go to let's say the 15 minutes time frame as well, you go to this time frame as well, you see that price just started like um ranged a bit here, started building down, started taking lows. That might also tell you that hey, you may not want to be in this trade anymore because as you can see, price is clearly starting to like take out lows, and maybe that's like your sign. And also you have to also say that okay, hey, I've already gotten to my target already. So hey, I may not want to still be in the trade. Price is looking like sellers are starting to get into the market, and I'll just
Yeah.
close and see how price progress. So my point to you is that once price gets to this zone, price has hit your target. If it breaks and you are still holding, then that's your choice. You're on your own. You have to understand why you are holding and understand how why you are in the trade, and really know that you are now on your own here. You are now following the trend. You are now following the structures price is making. So that's how I know if I should still be holding the trade or if I should close. But I will advise you as you are still learning. Like I said, sticking to basics. Price comes above here, you get into a trade. Price gets here, take your money and just wait for the next trade. That's you building experience to then lead you on to how you want to approach every other situation.
Uh, you don't have a question on do you mark up your chart on the 4 hour or you do mark them on the 1 hour?
I use
Which do you mark
both.
your structure on?
I look at the 4 hours. I understand the trend. I see. Let me analyze a pair in front of everyone now. So let's say I want to analyze Euro USD. Sorry, USD JPY. What do I do? I come to the 4 hour. I see okay, we are in an uptrend here on the 4 hours, and also we see that we have the you can mark out this level where price kind of made that indication correction, made that indication to the upside, and then price now is correcting. So now, as you can see on the 4 hours, is where I found this, and I also see that okay, price is making lower lows and lower highs here on the 4 hours. So maybe you may not want to be in the trade yet, or maybe you want to be in the trade. Let's find out. So now I'll go to the 1 hour time frame. Looking at the 1 hour time frame, I understand that okay, we have that above level where price made that indication. We have that level where price started to building lower lows and lower highs, lower lows and lower highs, and then above this level, price made this new low. But we can also see that
So,
price
question.
made this correction. After this correction, price tries to keep pushing back down, fails. So we have an equal low here. Now I can say okay, maybe a bit risky, but I can mark out this level. This level can also be like my indication level. So if I was to see price, maybe price break above this level, I can maybe wait for something like this, and then back above here, I can now get into the trade to keep targeting up. Or I can also say if price breaks above here and just keeps going up, then I can mark out this zone instead, which is a preferred zone. Mark out this zone and wait for price to get above that zone, and maybe give me an entry for me to get into the trade and keep targeting higher. That's how I analyze my pair. And now I've done this, all I just simple do is just go back to the 4 hour time frame and wait. That's how I analyze.
So the old downtrend, you don't enter on that old downtrend here.
So
The
what?
old downtrend, going on, you don't enter on any downtrend here. You say the old downtrend that is like forming, you don't enter off of the old downtrend.
This downtrend.
So they're like, kind of like an indicator.
So I saw a
Yeah.
trade here. This was a really good trade. I didn't take it for reason that I think I was already in two trades on my okay. It was a withdrawal day. I was on withdrawal day. I didn't want to get into another trade on my prop, so I didn't take this trade. Let me delete this. So this was a really good trade. Why was it a good trade? It was a good trade because as we see, price was making that lower lows and lower highs, right? Making that lower and lower highs. Price made this low, correct itself, and couldn't break above this level. If you go to the 4 hour time frame, you see that also on the 4 hour time frame, it did the same thing. Broke above here but couldn't go higher. You go to the 15 minutes time frame and you see that on the 15 minutes time frame, it went above there, and then when it got there, price couldn't go higher. It made a low, made a lower high, started making lower lows and lower highs. So that made it a really good trade to be in because the ideal entry would have been here. Even if you missed here, you could have still got something around here and just take the trade all the way down to here. So it was a really good sell trade. I just didn't take it, but that doesn't mean it's not a good. It was a good trade because obviously you were expecting correction. Also, price was making building that lower lows and lower highs. See that what that's nice. I talked about price building a consistent lower lows and lower highs. So that means you can't get into a buy position yet because price is building some consistency, lower lows and lower highs being built. So that makes you not want to kind of get into the trade right above here because price was still expecting lower lows and lower highs, and that's why you want to wait and see price start to build that uptrend so that you can get in.
All right, all right, all right. Thank you very much.
Next question.
What What are some of your goals for next year?
Um, Nice question, man. So goals for next year, I would say right now I'm kind of like I'm at that level where I'm trying to scale my account. I'm at that level now where my goal right now is to scale my account to maybe that having a live 10,000, $100,000 account where I can now trade, when I can now say, okay, I am fully in on, I am now a top trader. So that's my goal right now. So that's why you see me buying all these props, trying to get these props in, get the profits out, put it on there, and just my goal right now is just to scale my account to what I can, and next year see how the level where I can get to scale my account at. Now for you, for someone else also learning now, trying to get consistency, your goal for next year should be to find that consistency, to consistently make this amount of money every week or every month in trading. That should be your goal. Your goal shouldn't be to make $100,000 in trading because you may get disappointed. Your goal should be to talk about finding consistency, and then when you find that consistency, then for the upper year you now want to talk about scaling your account up to a higher level. That's what I would say. So my goal is scaling my account to 100K or a million. Let's see what the future holds. So someone said, can you explain the real purpose of journaling in trading, not just writing things down, but how it actually improves decision making, um, pattern recognition, and consistency? I want to understand what specific changes journaling creates in a trader performance. Thank you. So the reason why I say journaling, like I explained, I said that when I take a trade today and I write down, okay, this is why I got into this trade, this is why I closed, or this is how the trade played out. This is a before screenshot, this is an after screenshot. I journal these things down and I keep it. Tomorrow, I do the same. So after a month, I have over 20 trades or maybe over 15 trades of all my trades that I've taken this month. I do it again next month, I have 30 trades. Now, I'm telling you that when you go back to this journal and you look at each and every trade, you will see patterns that align. You may notice that in week one, price made this on the 1 hour, and this is what happened. Also on week 3, that same thing happened. Also on week 5, that same thing happened. Also on week 7, that same thing happened. And every time it happened, this is how you react to it. And every time you do it this way, you lose. You didn't know this when you were taking those trades, but you only get to find this thing out when you are now going back to your journal. That shows you that you have written down your own problem with your own handwriting without even knowing, and you only get to realize it when you go back to your journal. Example, let's say you have a business. You have a business where you are, you make this sale, you write how much you sold down, you make this sale, you write down how much you sold. While you are making those sales, you didn't know that this one sells, people buy this one quicker than this. You didn't know that people buy this one slowly but surely. You didn't know that this one spoils fast. You didn't know all these things. You only get to find out this thing when you then go back to that your book where you write down your sales book. Just realize that oh, we sell off this product the first month or the first week, but this product stays till the last week. Maybe we should buy this product less and buy this one more. You don't find out this when you are making those sales. You only find this thing out when you are going back to your sales book. That means that you have journaled the problems of your business without even knowing it. That is what the journaling does for you. It tells you what you are going through in your own handwriting. It tells you your problem in your own handwriting, and you only get to find this out if you journal every single trade, both the wins and the losses. That is what journal does for. That is exactly what it does for you. It tells you your problem that you didn't know existed. How back I said you have a question, you can ask if you haven't asked already. You can raise your hand and ask or unmute yourself. Good day, sir. I know this is about higher time frame market structure. I have a question about marking your chart. Must an indication be identified when market breaks either the swing high or swing low? Understand that for price to break a swing high, that's an indication already. Price is showing you that it wants to go this high. Let me. I know as you say about higher time frame market structure. I have a question. Must an indication be identified when markets? Okay, I mean, must you wait for the indication to be done for price to correct itself before you now buy? As someone that is learning, I would say wait for that indication to be done, wait for the correction, and then be on the continuation. Me personally, sometimes I trade the indication, but it has to make sense. I won't really start telling you that because that was built up from my experience. As you are learning, you need to allow your experience to show you when you want to trade that indication and when you want to avoid it. You need to let your experience tell you. Let me show you an instance where I traded the indication. I was on this Nasdaq as well. On this Nasdaq, if you go to the 4 hour time frame, what you will see clearly, no, if you go to the 1 hour time frame, what you will see clearly is that this break above this level should be the indication of price telling you where it wants to go. So we should have avoided the indication. But why did we trade it? Because if you go to the 4 hour time frame, you will see that already price has given that indication, correction, and then back above here is the continuation to the upside. So I mean, it has to make sense why you're getting to the trade. Also, if you come to the 1 hour as well, you're gonna also see that hey, on the 1 hour, price kind of gave that indication on small time frame indication, correction, and then back above here is where we got in. So the point is that it has to make sense. I can't really show you all these things now because sometimes you may see me avoiding this thing. So you let your experience build you up. What I'll tell you is that wait for the indication, wait for the correction, and then trade the continuation. That's the best thing I would say to you. The next question says, should should wait till 1 hour shift? Okay, you will answer him. On the BTC chart, you shared trade daily is still bearish, but 4 hour is showing bullish signs. And I have already shown you that it's not in a uptrend. I know this is about already. I got off work. What do you think about OGG4? I mean, buy. I'm thinking about holding it. I mean, if you want to, like I've already explained, we are we are in a downtrend on the USDJPY. So price is yet to take out, build a consistency on it. So if you got into a good position, if you want to hold risk free, you can. But all I'm saying is, hey, we see a low, a high, a low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. So would you want to be in a buy position here? I guess if you enter this here, sweet entry for you, man. Hold it risk free. But all I'm saying is that we are still seeing consistent lower lows and lower highs. So maybe for me to get in, I want to see that consistent high highs and high lows start being created. So that's why I wouldn't look for USJPY right now. Can you take? I lost yesterday on it. Can you analyze gold from scratch, please? I think you guys are looking for signals here. USDCHF. USDCHF. So on this trade, is in a downtrend. Let me see the 4 hours. It's a downtrend, looking like a downtrend. Looks dirty, man. But looks like price hit this level, couldn't make any higher. Price making a downtrend doesn't look clean to me. On the daily, you see price trying to build. Price not trying to build anything on the daily because this high here caused a break of this low, right? So with this low as well caused the break of this one. So I guess price is starting to come in. It's in a range, man. This is a no trade range. It's in a range for me. I don't know. I don't have anything on this pair. It's in a range for me. For gold, I think I have gold on my. For gold, what I see on gold for me personally is price is not breaking this highest level here. Price has failed to break it multiple times. If you go to the 4 hour time frame, you see that price on the 4 hours. Oh, sorry, I want to do the 1 week. On the 4 hour time frame, price made equal highs here. I'll take this off. I'll draw this out. So price made equal highs here. So that shows you that there are strong sellers at this zone, and it's not for the first time it has done it before. Price comes at these highs and just can't seem to go higher. So that shows you signs that sellers are in the market and they might decide to push price down. So right now on gold, I see nothing. If price was to go above here, then I guess you can then target this high. But as long as price doesn't go above here, sellers can push price down. They have the right to because they have obviously shown you that hey, price came here, rejected. Price comes here, rejected multiple times, and if price starts to break under these lows, that will be signs that sellers are still are strong at this zone, and they might decide to push price down. So for me, but why wouldn't I sell the gold right here? Because we are in an uptrend here, and for this uptrend, for me to sell, I need some consistent build up for me to say okay, I can look for sales and target lower. So right now on gold, I see nothing. Just mark out this level for me, and if price breaks above here, then you can keep going higher. Okay, so I've already told you what I think. Kind of want to be patient. I'm above here. I can look for buys to look for get to this zone, but if it doesn't come above here, I can't look for buys yet until I see something else. Right? So right now I see nothing on gold. I just think you should wait. I think price is still respecting structures. So as you can see, this low made this high, and price is still ranging on around this level. There's no break yet. So I guess you can also mark this out. Can also mark this out. See our price is kind of ranging inside this zone. So maybe a break under this level may be a sign that sellers can push price down. But the best trade I would say would be if price was to come above here. Above here would be a better trade. Why? Because we are already in an uptrend overall. So above here would just be trend continuing itself to the upside. But below here, you may want to just say I'll wait and see how everything progress. That's my thoughts. Do you guys have any more question? We are 2 hours and 20 minutes in the call. It's been a good call so far, and I would like to. As we are waiting, I want. Let me see how many people are here. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Not much people again. So, what do you guys think about the call so far? Do you guys think I've done justice? Do you guys think I need to do more? Let me know what you guys think so far. Are you guys still here? I'm seeing chats. Someone should talk. Someone should talk. I'm seeing chats here, bro. I kind of want to see someone talk because I'll post this video on YouTube. They might want to see how the call is so far. So someone should give us an opinion.
Um, so far, I think you're doing really, really, really great, you know. You answered my questions very, very well, and you answered other people's questions very nice. And I learned one or two from the answers you gave to other people. So yeah, so just keep on doing what you're doing, bro. It's a great job. You know, everybody, some people like me, I do watch Sai, but I still learned something from you, you know, because not everyone is able to understand Sai like that. They need someone to give a more better, explanation and understanding. So I would say, thank you very much for this call. Thank you. God bless, man.
Thank you, man. God bless you too.
Sure.
Anyone else got anything to say? So I think I would say one thing I do these calls for the reason why I already know inside YouTube you will have day one ICC, day two to like day 20, but me also I'm trying to create that thing as well, having day one to day 20. I trade the same system he trades. I learn from him. I trade the same way he trade. But one thing I noticed is that when someone came to my video, like this guy said now, he said, I have watched all sides video, but you watching your video has helped me understand it more and more and more. I realized that no matter how good you teach somebody, no matter how you try to teach someone something, not everyone is really gonna understand what you're teaching because that's just different people and different beings. So not everyone will really understand what you're teaching them. But being me now being able to lay this helping hand is just me saying, hey, this is how I understand what he has taught me. This is what I'm doing. This is what I'm not doing. And I'm hoping that I'm on the come up, and I'm hoping that it can help someone else because I think everyone trying to learn from Sai is also on their come up. So I feel like it will be a bit more understanding for them when they hear from a fellow come up someone talking about ICC because Sai makes millions of dollars, and you always have that at the back of your mind saying, of course, you can say this because you are making millions of dollars off the chart. Or you will always have such words in the back of your mind. So I'm hoping that me, I don't make millions of dollars. I don't even make 10K on a trade. So hopefully, me being on my come up, saying the same thing helps you kind of understand it more and feel like you're on the same page. That's why I'm doing all this.
Thank you,
That's
boss.
good. Thanks,
Um,
man. Thank you.
Gotcha.
one question. How many pairs do you trade, and can you tell us which ones? Thanks.
So uh I do trade Nasdaq, gold, US 30, SPX, but I say SPX 500 and Nasdaq are the same pair. They make similar moves. If Nasdaq is buying, SPX is buying. They most of the time they look very identical most of the time. So I trade SPX, Nasdaq, gold, US 30. Then I have some forex pairs on my list like Euro USD and yeah, 5 pairs. That's right. I trade SJPY as well, but rarely. But my pairs, 5 pairs, which is Nasdaq, Gold, SPS 500, US 30, Euro USD. I don't trade Solana. I rarely, unless I call it out. I don't trade ETH. I don't understand how it moves. I try as much as I can to avoid BTC. I rarely enter BTC trades because of how it moves, and I don't really trade ZAG US silver. I don't trade silver. US oil, I rarely trade it. Sometimes I see good trades here, but I rarely trade them. My main pairs are gold, Nasdaq, SPX, US 30, and Euro USD are added to the mix. Any more questions, or maybe someone else has something nice to say?
What's some advice that you can give to new people who are just now starting out but haven't started trading yet?
Mm, what I would say to someone starting out, I would say the first thing I'll tell you is that you are in a better. I always say it. You are in a better position than someone that has 5 years experience but not profitable. Your position is where I wish I was if I wasn't making any money off trading. So understand that. Understand that you need to focus on higher time frame. Use the 4 hours a lot. Use the 1 hour a lot as well if you want. But 4 hours I recommend. Use 4 hours a lot. Your goal right now is not to change your life. Your first goal is to find consistency. No matter how small the amount of money you are making, you need to be able to make that amount of money consistently. It's only when you find consistency that you can then try and replace your job with trading. And then when you place your job with trading, your next goal will now be to scale your account. You don't want to come into trading for the first time and you're trying to scale your account to $1,000 or $10 million. That is an unrealistic goal. You don't want to come to trading trying to flip accounts. That's an unrealistic goal. First step, find consistency. When you find consistency, replace your job. When you place your job, scale your account. Um Also, the best place you can learn trading is through Science YouTube. I'm just a messenger, man. I'm just here to help as much as I can. And yep, that's what I would say. Then just to talk about myself as well, I do teach trading because I provide everything I provide. I give, I call out trades, I explain, I do this kind of zooms every once in a while. But there are also some people where they maybe someone I've seen people that are doing very well in other industry and they want to try out trading and they come to learn from you, and maybe they don't have time to wait for free zooms or free education. If you are that kind of person, you have money to afford being taught privately. I offer private coaching as well on trading, but it's not necessary for someone that can't afford it. You can just stick on the Telegram, stick on these calls, stick on the YouTube. I provide everything about the way I trade there. But if you are someone that is doing okay and you can afford to do a private coaching, go for it, man. It's worth it. And that's the advice I have for everyone that's starting out. More questions?
Yes, boss.
Yes, go on.
Can you please discuss on stop losses, where you put your stop losses on your trades, and maybe show some examples of some trades you took and where you had the stop loss and what time frame you used to put the stop loss? Thanks.
So, like I said, the stop loss I use, I say again, your stop loss needs to be at a level where your trade becomes invalid. In terms of the trade where I took that I used a stop loss, where I used, let me use Euro USD. I had a really sweet stop loss on Euro USD at one time. The call we caught here, I used, let me go to the 1 hour time frame. So the call we caught here, we got in around, what was our entry again? Can't. Um, Trying to find our entry on this pair. I've forgotten where we got into the entry on Euro USD, but I think I broke it down then. We see price this high cause a break of this low. So let me use for so on the higher time frame we saw that this high caused a break of this low from the daily. That's what we saw. This high caused a break of this low. Price corrects itself, gets to this high but doesn't take it out, and then sellers start to come in. So we see on this 4 hours, price start to make these lower lows and lower highs. You go to the 1 hour, becomes even more clear that price is starting to make lower lows and lower. So price made this low, lower high, lower low, lower high, lower low. So price started to build a downtrend, and that's why we got into the trade, because we know for a fact that as long as this level keep being respected, sales can play. And also if you look here, we start to get price making indication, not as clear as possible, but price keeps making making lower and lower highs. So we cut a trade. I think we got in around somewhere around here, and we had our stop loss above this zone, because as you can see, this low took out this low, corrected itself, made a new low. So as long as price remains under this level, sales can keep pushing price down. And that we took that trade, we coupled with the fact that hey, on the higher time frame we are in a downtrend, and also price is not taking out this level that caused break of this low. So of course price can keep selling down. I always highlight the higher time frame because I pay attention to that a lot. So that's why we took this trade. We had our stop loss above this level, because above this level, as long as price remains under these levels on this time frame, sales can play. Can it is it a bit small? It can be, because as long as price also remains under these levels, sales can also play as well. But on that instance, I use this stop loss for the reason that hey, I like the stop loss being here. It's on the 1 hour as well, makes sense, and we're in session, so I use the stop loss. So in terms of my stop loss, I'm very flexible. On this trade, I might use this time frame for the stop loss. On that trade, I might use another time frame. I'm not on do this, do that, or do that, do this. I'm flexible on where I use the time frames or where I use the stop loss. I didn't use all the way up here because it was a bit too huge for me. I used something here because here was good. It made sense. I see the build up and everything just aligned. So I see price is making lows and making highs. So I'm like, it's everything aligned. So I'm not going to go in and tell you, hey, put stop loss here, put stop loss there. No, all I'm trying to tell you is that hey, your stop loss needs to be at a level where your trade becomes invalid. That's where you want to have your stop loss. You want to have your stop loss where, for you as a beginning, that's why I'll tell you, you want to have your stop loss where your trade becomes invalid. If you cut a buy position, let's say you caught this indication correction and you got in a buy position here, you won't have your stop loss under these levels. If you call this indication correction and you got an entry here, stop loss should be under this level. So you want to have it at a level where hey, your trade becomes invalid. So it's it's not fixed. It depends on the situation. That is where you kind of make the best choice for yourself. You want to allow yourself to build up. But ICC, in terms of ICC, already give you where you want to use your stop loss. So let's say you see this on the 4 hours. You see price comes builds up, and then on the 4 hours price creates this indication, creates a correction, and then back above here, ICC tells you, hey, your stop loss should be under this level because this level is where price started to make higher highs and higher lows. So ICC already gave you that stop loss here. So as you are beginning to trade, use the ICC stop losses. So if ICC says stop loss should be here, use here and then target these highs for the meantime, and let your experience then show you how to approach other situations. There's no black and white. It's always flexible. It's always making the best choices for yourself at the moment.
Hi, hi.
So watch it.
Uh, thank you for your analysis. Very appreciated. Thank you. I would like to apologize because my English is not so good as yours, so I would like to speak slowly and trying to find my words. Sorry
Okay,
for that.
go on.
Okay, my question is, I think you already answered it, but I want you to be clear because there is two scenarios about the correction.
Okay.
Will it be best to wait since you have the indication in the 1 hour? Is it the best way to wait for the correction to happen in that 1 hour before jumping in the 15 minutes? Or is it
Yes.
the best way to, okay, you answer it. Okay, that's where I'm struggling because sometimes when I have the correction in the 1 hour, I start jumping into to the 15 minutes, starting to the waiting for the correction happening there, and then I keep the stop loss very high, very rapidly. So that's where I was strongly in that ITC strategy. So since you answer it, and I saw it again on that example you show about the 4 hour, so you have to wait for the correction to happen in the higher time frame and then jumping in the lower time frame to find your entry. That's all.
So the the reason why people always jump in on the lower time frame, they really jump in there because first of all they don't want to miss out on the trade, and then secondly they want to catch a sniper entry. People love that a lot, but you need to understand that let's say you found an indication on the 1 hour, a correction on the 1 hour. 1 hour is a middle range time frame. Wait for it to continue on the 1 hour and then get in there because it's a middle range time frame. So if you
Yeah,
find indication on the 4 hours, correction on the 4 hours, then maybe you can go to the 1 hour to wait for price to break back above that level for you to get in on the 1 hour. What I just don't
yeah,
say is don't really go to the 15. If you go to the lower time frame like the 15 time frame and find an entry there, you want to make sure that the 1 hour and the 4 hour is breaking above that level. Otherwise, your trade is risky trade and you may want to
yeah,
just
yeah.
close or something like that. So you really want to
Yeah,
wait
okay.
for that closures on the 1 hour or the 4 hours. It's very important.
Yeah, thank you. Thank you very much. Thank you for your advice. Thank you.
Got you, man. More questions? I've really given you guys time, man. I'm here right now. Ask me the question. Don't wait for me to come to the group and people start questioning me on the group again. Ask me now. We are here.
Yes, boss. Back to the stop loss question that I had. Thanks for explaining. So, but do you ever move your stop loss once the price starts trending in your favor or no?
No, I don't move it. It stays there.
Okay.
Because the reason why it stays there is like I explained. You place your stop loss at a level where if price gets there, that means your idea for getting into that trade becomes invalid. So why would you move your stop loss just because it's in profit? You put the stop loss there because you said yourself, hey, price is allowed to move around here as long as it doesn't get below here. So if the trade is in profit, why are you moving your stop loss? Is price not allowed to move around there again? If price moves around there, does that mean your trade is now invalid? It's just that maybe you don't want to lose the money, but in real sense, in real world, if you remove the money out of the picture, price is still allowed to move around there. Your trade still remains valid. Your trade is only invalid when price has gotten to your level where you said, hey, under these levels, my trade is now fully invalid. So stop losses, you have to define your stop loss. Stop loss is defined by an area where my trade becomes invalidated. If you think about that, there's doesn't make sense for you to move that stop loss.
Okay. Thanks, boss.
Eh,
Gotcha.
Morgan,
Yeah. Yeah.
Just can I'm gonna ask you a question about what we were like talking about me and you. Yeah, like on that 4 hours Euro USD, if we see well on 4 hours, it broke the swing high. That's mean it's like in it's like in correction, Cesar, if I understand. The I'm just asking on or that pair on 4 hours, it broke the swing high.
Yeah.
Yeah, that one, yeah.
This is
Hmm.
price telling you that hey, this low, this high made this low, but now
Yes.
buyers have started to build themselves, and now they have successfully taken out this high.
Hmm.
That shows you that buyers are starting to come into the market. Does that mean you should buy here? No. It just shows you that hey, buyers are starting to come into the market. And if price is above here, that means that buyers can push. They can push price to the next zone. That's just what it means.
Okay, thanks so much. Okay, thanks.
More questions?
Me,
Uh,
I'll ask a last one,
go
if
on.
it's okay,
Go on.
because usually they don't like to ask questions.
It's okay.
uh, yeah, like when you are. Sorry, I speak French. That's why my English, is I'm searching for it.
It's okay.
Yeah, I mean, like when you are putting your entry, do you wait that the candle closed, for example, is doing like high, 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 low, high, 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 low. Do you wait the like candles to close before you enter now your position?
Yes. I wait for candle closures on the 1 hour. It's a very strong time frame, and it's where I like to see it closures on for me to then be my trade confidently.
Okay, thanks so much.
Hey, it's five. Hey, very
Any
good.
more questions? There's no more question. We might call it a day because it's been 2 hours and 40 minutes, so almost 3 hours now. So it was supposed to be a 5 hour class. But if you guys don't have any more question, then it's going to end up a 3 hour class.
I don't have a question. Okay, I think it's not a question. Good evening. It's like a request. So I trade the synthetic market. So
Okay.
I was wondering if you could like make an analysis on the synthetic market, even if it's one pair. That I would really appreciate that.
Well, the synthetic market, I don't even know how to get to the chart. I'm not sure it's on Trading View. I don't even know how
Yeah,
to.
it derive trading view. If you check derive trading view to come up.
And another thing that I would say is, hey, I don't trade that market. You are asking me to go and give you an opinion on something I have never in my life traded. That is going to be me misleading you. That is why I would not really go there because I don't trade it. I don't know how it moves. I don't know how it goes. I don't know what influences. I've never traded there in my life. So I can't really go and tell you something about it. I'll just say, hey, you've learned ICC, try it out there, and if it's working out there, then you can do it. But I can't really go there because I don't trade it. That's just why I can't go there. I've never traded in my life, so I won't like go there to then give you an information that I've never used myself. If that makes sense.
All right, thank you.
No, I got you. More questions? Okay. I think no one else is asking questions, so let me check the chat.
Okay, one more last question.
Alright, go.
So so this do you plan on doing this call again sometime soon or so?
No, bro. 3 hour class. That's a long time. 5 hours
Oh
class.
no,
I'm
yeah,
really
no,
gonna.
no, not
I
like
can.
no.
I can.
It doesn't have to be like 3 hours or so. But I was just asking maybe, or is this just this a one time call or something?
It's more like a one-time call. I'll probably do it again in the future. I just don't know when. So
Okay, all right.
that's what I'm saying.
All right.
I just don't know when. I'm just saying, hey, it's whenever I can. I just announce the hey Zoom tomorrow or whatever, but I don't know when. That's the truth.
All right, sharp, sharp. You've been very helpful today, man. Thanks a lot.
That's you, man. I'm glad I can help.
Sure.
All right, boys.
Logan, me, can I ask you my last question and I'm
Okay,
done?
go on, no
I
problem.
have I had a lot today. Sorry.
Oh, it's okay.
Uh, Me, just to be sure, I really understand like what I was doing wrong.
Hmm.
Like if I understand, on 4 hours you look for the trend to see like if the trend is bullish. For example, is bearish, like to know the market where it's going. And on that 4 hours, you mark your charts like what you did. And on 1 hour, like your frame, your time frame should align. Sorry, should be like the same. We can say like that.
Hmm.
I understand. And like just to be sure, and on 1 hour, what I understand, you mark your charts to on 1 hour too. If I'm getting it just for the like to enter, like to the indication, correction, punctuation, if I
So
understand.
I can mark up on the 4 hours, but when I get to the 1 hour and see that okay, the 1 hour is cleaner on the 1 hour, I can say okay, let me mark up on the 1 hour as well, and then focus on the 1 hour. So my markups can be on the 4 hours, it can be on the 1 hour, but the one I pay more attention to is the one that looks the cleanest to me, the one where it makes the most sense, where the closures are clean and where everything is just really really good. So example, let's say you see let me use gold. I think gold is looking like that. Okay, let's say Nasdaq. So now you see Nasdaq where I said, hey, if you can you guys still hear me?
Yes.
Yeah, sure.
My default microphones. I hope my voice has been showing on the recording for a while now. Oh my god. Anyways, so like I said here on Nasdaq on the 1 hour time frame, I marked out this level saying I want to see price break above this level for me to then look for a trade, right? On the 1 hour time frame, we see that price broke that level I want price to close on. You kind of broke that level, but on the 4 hour time frame, it hasn't broken that level. And also, 4 hour time frame look more assured, it looks more clean, it looks more obvious where the level should be. Look at the 1 hour. Let me go in there. You see how 1 hour is looking? Looks like here close here, but here close a bit above. There's a bit of a struggle on where the exact level should be on it. But if you go to the 4 hour time frame, it looks more clean. It looks more clear. Where I can even use one single line on the 1 hour to show you where the closure is at. So let me use, let's say I use this. I'll just mark up. Okay, I'll just say okay, we have price obviously not going above this level. So that single line shows you that hey, price is yet to close above that level. So I can now say okay, I'll use the 1 hour because the 1 hour it looks the cleanest for me. So in this scenario, I might use the 4 hour to wait for that closure. So my point is that I can mark up on the 1 hour, I can mark up on the 4 hour. Where I'll mark up depends on where looks the cleanest for me, looks where I can understand the trade best. That's where I mark up on. So sometimes it can be the 4 hour, sometimes it can be the 1 hour.
Okay. Thanks so much. I understand now. Yeah, I see my mistake now. Because me, I was always like doing my marks on 4 hours because I in my head is the frame which is so strong that
Yeah.
yeah, and I
You're
was not getting it so good.
you're not wrong. It's just that you have to understand that if you're marking up on the 4 hours, you are not going to be getting trades as much as you will be getting if you're marking up on the 1 hour because of course the 4 hours needs time to build up. So just that's just what you have to understand. And yep, that's all.
Thanks so much. Thanks
Got you.
again.
Got you, man. So I think everyone has asked questions, nothing else. I guess questions are now being repeated more like. I think from here we're going to call it a day on our 5 hour five not so 5 hour class because it's been 3 hours I would say. So barely almost 3 hours. Um, thank you guys for being here. For you guys that stayed to this point, it's not easy to stay on the call to this point. I'm happy I've been able to help some of you. I'm hoping some of you are going to help me someday. Maybe send me money. Who knows? But I'm glad I've been able to help. It's been a good call. I haven't been bored. You guys have asked good questions, and I'm glad I've been able to help some of you guys. I'm on Telegram where I share my trades. Like I said, on Instagram I post trading tips every day. ICC Mafia admin on my IG. I please follow my YouTube if I post a video. Do like, do share if you wanna share. And I think that's it. I also offer private coaching if you wanna go for that. If you have the money, it's quite pricey for some people. But that's all I'll say. I enjoyed this call. Glad to have you guys and looking forward to more. Enjoy the rest of your day and good luck on your journey in trading. Bye bye.
Thanks so much. Bye bye.
Thank
Alright.
you.
Alright man.
Thank you.
Alright guys.